A US study says the vaccine prevents 79% of COVID cases, paving the way for approval stateside. And Credit Suisse signals a potential spin-off of its asset management unit after the collapse of Greensill. More from our exclusive conversation with the lender's CEO. Good morning, everybody. Let's get to the futures picture then. All through the morning, we have seen futures in the red, but they do seem to have been deteriorating just a little as we've been going through the last half an hour of programming. So European equity market futures certainly pointing to the downside. US futures point broadly to the downside, with the exception of NASDAQ futures, which point higher, and with slight underrepresentation of technology names in Europe. Perhaps that doesn't read across. What is very clear from the start of the European trading day has been the moves, the sizable moves in the Turkish assets. You can still see there on our GMM screen that the Turkish equity market is down by some 7%. Of course, circuit breakers have been triggered as we've been moving lower on Turkish stocks, so that's where we sort of move lower and then hover there for a little bit. The Turkish Lira also down by 9.6%. It has been down as low as 15%. It's been down 15%, and actually it moved to 8.46 to the dollar at one point. We still have a 7 handle, or we've recovered back to a 7 handle on the Turkish Lira, but still sizable moves coming through there, and sizable moves on Turkish sovereign debt as well, as you can see. So all things Turkish dominate the GMM this morning. This in conjunction with other news flow that we need to be across, and that is in particular to do with delays to reopening European economies. The German Chancellor, Angela Merkel, wants to keep the current lockdown in place for another 4 weeks. She's discussing the proposals with regional government leaders later today. For hard-hit areas, Berlin may also suggest a curfew and closing schools. Case numbers are rising again after officials began to relax restrictions in February. Joining us now is Callum Pickering, Berenberg senior economist. Callum, good morning to you. Thanks very much for joining us this Monday morning. So we find a confluence of factors influencing market sentiment this morning. One of them is around Turkey and the change of central bank governor there, but closer to home perhaps for us is the news surrounding what's going on in Germany and lockdown measures to last longer there. Is that the direction of travel in the short term? We're going to see European countries having to cling to or reintroduce those lockdown measures, and that is going to be a threat to the recovery story economically in Europe.
I wouldn't say that it would threaten the recovery, more like it would just delay it by roughly a time proportion to the lockdowns. So we think probably you're going to see a month, maybe even 6 weeks of additional lockdowns. The two things to keep in mind here. First, over time, economies seem to be handling the restrictions better. So if you take a look at the economic data currently and compare it to this time last year when we first introduced restrictions, the difference is significant. So economies are operating with lockdowns at anywhere between 3 and 5% below their potential, compared to 20 to 25% below potential a year ago. So underlying economies, we've adjusted. The second thing is there's a lot of pent-up demand on household balance sheets. Everyone's ready just to go back out to the shops, to spend, to go to the pubs. So the question here is really about when does the recovery start, rather than is the recovery at risk?
Right, so it's a question of delaying that recovery. What is your expectation then, Callum, as difficult as it is to achieve right now? How far behind do you think the Eurozone story is when it comes to economic recovery versus the US?
Well, the US is fiscally supercharged. It's had 12 months of restrictions at mostly a lighter level than much of continental Europe. So the US is probably going to get back to its pre-pandemic level of GDP either in the second quarter. It may have even got there in the first quarter. For the European economy, we're probably thinking about mid-2022. So we're probably 18 months away from a full recovery. But let's just put this into some historical perspective, and let's take the UK as an example. The average recovery for the UK from a recession is about 13, 14 quarters, so a little over 3 years. We expect the UK, the European recovery, to get back to pre-pandemic levels in mid-2022. So you have a historic drop in economic output and one of the fastest recoveries in modern history. So even though Europe is behind the US, this is by no means a slow recovery from what was a huge shock.
Okay, one sector that might be recovering a little more slowly than anticipated, though, might be travel and leisure. Just looking at the GRR, this is the global ranked return, or group ranked return, sorry, on, so the sector breakdown basically across the European equity market picture. And the biggest losing sector is actually banking, but closely followed by travel and leisure. So travel and leisure down by 1.4%, being weighed down by these tensions between the UK and the EU. What does that mean for the summer season ahead? And the banking sector under pressure because of the Turkey story. I suppose on the travel and leisure stocks, Callum, there's been a big focus on summer, and what is really crucial for this sector, and what is really in focus, I suppose, for this sector, is whether summer is going to be cancelled or not. That is an overly binary question, I know, but we are going to see it being, the closer we get to summer, the more difficult it is to envisage anything like a normal summer for Europe.
That's right, and probably the winners and losers are basically the southern and peripheral European economies where the Brits, the French, the Germans go on holiday. And the winners will be, well, the domestic sectors in the economies that usually have the most tourists leaving. So domestic consumption in Germany, in northern France, in the UK may actually benefit if we have restrictions on foreign travel. So for a place like the UK, actually travel restrictions probably don't spoil the economic story too much. Same goes for Germany. But for Spain, Portugal, Greece, this becomes a potentially significant issue. But it may well be that it's just the first half of the travel season which is restricted. And with a bit of luck, a bit like last year, by late summer, autumn, September, we may see things ease up a little.
Is there pressure, do you think, Callum, on European governments, and I define that quite broadly, pressure on European governments to do more fiscally based on what we've seen in the US? There's the $1.9 trillion already signed off, but then there's an infrastructure bill to come. Is there pressure for Europe to do more? Yes, we've got the recovery fund, but that's more, that's not the same as the $1.9 trillion that the US has done.
I mean, markets always like to see supercharged economic growth in the near term without really thinking about the long-term consequences. Now, if you take a look at the advanced world, there is huge excess savings sitting on household balance sheets, and households are eager to spend them. So we don't think there's going to be any serious lack of demand once things start to reopen. So if you compare the US, which is boosting near-term consumption just to get back to pre-pandemic levels of GDP, whereas in Europe, we're not doing it. Think about what happens then later down the road. The US eventually will have to hike taxes, whereas Europe just waits for the recovery to start. Households will mainly drive it. But if you then look at the investment side, the US has some decent investment plans, but so does Europe. There's the recovery fund in places like the UK and Germany. You have 5-year investment plans. So I think actually history will show that the European fiscal response was actually a bit more proportionate than the US, even if markets aren't getting quite as excited about it in the near term.
Okay, so maybe Europe withstands any pressure then. Callum, thanks very much. Stay with us. Callum Pickering, Berenberg senior economist, stays with us on the programme. Coming up here on the European Market Open, investor concerns that a stronger economic recovery could lead to much higher inflation are dominating equity and bond markets. We will focus on the inflation debate next. This is Bloomberg.
80% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
Welcome back to the European market open. 10 minutes into a European trading session that looks to be broadly under pressure. So the Stocks Europe 600 down by 0.5%. Some interesting standout moves to the up and to the downside. Let's just dive into one of those to the downside. IAG shares slumping down 16%, as you see on your screen. This in response to the tensions around the vaccine rollout between the UK and the EU, and also the extent to which lockdown measures are going to be needed in various parts of Europe, and whether this delays a return to more normal life when it comes to travel. Let's think about that as we go to Danny Berger with our movers, because Danny, I know that one of the travel names was on your list, but just throwing in that move on IAG, which took until 10 minutes into the session to actually open up.
Yeah, definitely. Most of the travel names we're seeing in the UK are taking a hit, but I wanted to start with a positive story on what's mostly a down day. That's VW. We actually talked about this one earlier too. These electric vehicle moves from VW, BMW, really powering the German auto sector higher. So that is one of the best performers. But let me get to that other travel name you mentioned. TUI is one of them that's declining about 8% or more this morning. Again, it's the tensions between the EU and the UK over vaccines. It's traveling. Will there be a European summer holiday? So IAG, TUI, all of those moving to the downside. Finally, the other big market story today, it's what's happening in Turkey after the central bank governor being ousted by Erdogan. BBVA holds about half of one bank in Turkey. So that's why we're seeing some exposure there. Now, overall, the contagion of Turkey is somewhat contained. However, let's go ahead and take a look at what all the Turkish markets are doing, because they have had some dramatic moves today. Now, the stock index falling 8%. Two circuit breakers issued in just the first 30 minutes of trading. We're also seeing the biggest leap in the 10-year on record. And meanwhile, the lira continuing to take a plunge. The now ousted central bank governor had started to raise rates. That made the lira a really attractive carry currency. But the fear is now that he's gone, that the preference will be towards keeping rates low, denting that trade. So just really across the boards here, Anna, we're seeing a lot of these Turkish assets seeing a lot of red today.
Yeah, a lot of red. Danny, thank you. And just let's stick with what we're hearing out of Istanbul today and the market reaction. So Borsa Istanbul saying it is monitoring trading activity. We've seen some of those circuit breakers kicking in already. Borsa Istanbul also warning investors to act in line with regulations. Earlier, we heard from the Treasury in Turkey saying that they were going to, they're not stepping back from free market and liberal FX regimes. The market, of course, has moved in its own direction. As Danny was just going through, we've seen substantial moves in FX markets, in the stock market, and indeed in sovereign debt. We will have further analysis of Turkish market activity a little bit later on in this program in around 15 minutes' time. Let's get a Bloomberg Business Business Flash, here's Laura Wright.
Thanks, Anna. Saudi Aramco's $75 billion dividend has survived one of the biggest disruptions to oil markets in decades. Aramco will make the payout for 2020, despite a slump in earnings and revenue due to the pandemic. Its dividend is the largest of any listed company, and almost all of it goes to Saudi Arabia's government. Porsche's CEO is signaling he'd be open to an IPO of the German sports car maker if parent Volkswagen decides to pursue one. Listing the division has been touted as a way to bolster VW's valuation and help it catch up to the likes of Toyota and Tesla. We spoke to Porsche's CEO about the semiconductor shortage hitting the industry.
It's a serious topic. The whole industry is affected. The capacity is too low for all players like automotive industry and consumer electronics. And so it's a troubleshooting day by day.
Blackstone is offering to buy Crown Resorts in a $6.2 billion deal. The private equity firm already owns 10% of Crown. The offer comes as the troubled Australian casino operator is facing pressure from regulators. Last month, it was found unfit to run its new Sydney casino amid a report on money laundering at its other properties. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Let's focus in on the inflation debate. Richmond Fed President Thomas Barkin says the US economy is set for a strong 2021 that will push up prices, but there's no sign yet that this will deliver unwanted inflation.
We're going to see an extremely strong year, and I think that strong year is going to lead to price pressure. I want to emphasize inflation's not a one-year phenomenon, it's a multi-year phenomenon.
Callum Pickering, Berenberg senior economist, is still with us. As my colleague Mark pointed out to me earlier on, those comments perhaps meant to sound a little on the dovish side, talking about any pickup in inflation. That's not what they're looking for. Any pickup in inflation this year is not going to necessarily be indicative of what comes ahead. You know, just because we see inflation over the summer doesn't mean we're going to be seeing substantial inflation by December. What would you expect to see on the inflation story as we go through this year, Callum?
That's right. We're going to have some one-offs that will push inflation temporarily higher. That's the adjustments to reopening. It's the base effects of oil price. In Europe, we have the return of VAT to normal. But then that's going to fade a little. And a headline inflation is going to come down towards the end of the year and into next year. And then things are going to start picking up again. It's a bit better to look at core inflation because it takes away some of these one-off factors. You know, on a 2-year view, I think core inflation, US, UK, probably gets to 2% by early next year. The Eurozone's a bit further behind, so you're probably looking at around 1.5% by the end of next year.
So that's the inflation trajectory. Callum, we've had a question coming through from a viewer about demand pickup and how you see demand picking up over what time frame. It doesn't specify the geography. So as we're talking about the US, let's think about the US. How do you expect the demand story to evolve, given all of the various things that are going to be thrown at the US economy, from stimulus, from infrastructure spend, from savings in bank accounts? What's the trajectory from here on the demand side?
I mean, if you think about this in nominal spending terms, you're probably looking at something to the order of about 15% cumulative gains in nominal demand in the US over the next 2 years, which is absolutely huge. However, there is still considerable supply potential in the US, which has not yet been used up. And what you hear from the Fed, from the Treasury, is it's better to test the limits of growth. So let's actually push up against those supply constraints. And then when we see the inflation, we'll react to it. It seems to be pretty clear that the Fed, at least, is not about to project significant inflation overshoot until it's absolutely obvious in the data that CPI is heading in that direction. So US Treasury, the Fed, very aggressive for the next 12 months, rapid gains in demand, nominal spending in the US, and probably by this time next year, we might see a bit of evidence of that in the price data.
Okay, so rapid gains for the US economy and a Fed that's going to stand by and let that happen, essentially, Callum. We got a green light from the Fed for curve steepening, for higher yields stateside. What does that mean for you then? When you look at the US 10-year, it's at 1.68%, got over 1.7 last week. What's the upside from here on US yields and crucially for real yields as well?
Real yields should rise with better gains in productivity. I think there's pretty good evidence that the pandemic is forcing the diffusion of technologies from the frontier in tech and manufacturing to the rest of the economy. That's actually one of the positive aspects of the restrictions. When it comes to nominal 10-year US yields, we could be heading towards 3% within a couple of years, but in the long run, it could go higher. Yields are just far too low relative to the economic and inflation outlook. And the adjustment process is really what matters for markets, because higher yields that reflect better growth and stronger inflation is a good thing. Remember, we've had low yields for the last decade and economic conditions have been quite poor. So higher yields that reflect better economic conditions is a good thing. The adjustment won't be smooth though. Markets are just going to have to get used to higher benchmark interest rates. So that means actually some losses for the holders of those bonds, and in equity markets, occasionally we might be prone to a little correction here or there when analysts revise up their expected discount rates and bring down cash flow estimates.
Callum, thanks very much for your time today. We appreciate you joining us. Callum Pickering, Berenberg senior economist, joining us this Monday morning on the European Market Open. Coming up, Credit Suisse CEO Thomas Gottstein says he'd consider spinning off the bank's asset management unit in the wake of the Greensill Capital collapse. We'll bring you our exclusive interview. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the European Market Open, 22 minutes into a negative trading session for European equities, for most of them at least. Now, Credit Suisse CEO Thomas Gottstein says the collapse of Greensill Capital is a, quote, distraction. Speaking exclusively to Bloomberg TV, he signaled he'd consider spinning off the asset management unit from the rest of the bank. We'll bring you that interview in a minute. But first, let's just recap at how the scandal around Greensill unfolded. Greensill's primary business was supply chain finance, helping companies companies with their cash flow, purchasing invoices at a discount, then collecting payments at a later date. The trouble dates back to last summer when the company lost insurance coverage for its debt repackaging business. As the problems mounted earlier this month, SoftBank wrote down its investment, Credit Suisse froze its funds, and then on March the 8th, Greensill filed for administration. Let's hear now then from Thomas Gottstein, the Credit Suisse Group CEO, who spoke to Bloomberg's Richard Salamat ahead of the lender's annual Asia Investment Conference.
Well, look, Greensill is part of our asset management. It's in the first instance an asset management problem. We are working with the administrators of Greensill Capital, and we are 100% focused to get as much money back as possible. In parallel to that, the board has put in place an investigation whether there were shortcomings in the first or second line of defense. It's too early to talk about that. Clearly, it's an evolving situation, but I'm actually confident that we will come out stronger from this episode. It's a learning process. We have announced to take asset management out of IWM and put it under leadership of Uli Körner, who will directly report to me. It will be its own division with the own first and second line divisional support that it needs and warrants.
Let's just talk a little bit about the magnitude of the financial hit you may well have. How many centimes in the franc do you think you'll get back, and what ultimately will investors be left with, and how much will you be left with to carry the burden, and how much of it is insured?
Well, we cannot comment on that at this stage. Please, you have to understand it, otherwise we would have communicated it already. But you were absolutely right. We already had a strategic review of the asset management business. I was never a big fan of the fact that asset management was part of IWM, and this Greensill situation has now accelerated what I was planning anyway, to take it out of IWM. So Uli Körner will now put his team together and will take asset management to the next level.
Well, does the responsibility at senior level stop with Herr Wawel, or are you considering further actions?
Well, this will be now subject to the review that I said that the board is doing. Right now, we are focused on finding the best solution for our fund investors. That's our priority. Our priority as a management team is to get the best solution for them. And in parallel, there will be an investigation, and I'm not going to speculate on the outcome of that.
One more question. If you split off asset management, do you foresee it actually being spun off into a completely separate entity, which could be independent?
That's potentially part of the plan, but the most important one is now it's its own division. It's in different legal entities. Having a holding company around that could be something we are pursuing.
Credit Suisse Group CEO Thomas Gottstein there, speaking ahead of the bank's annual Asia Investment Conference. Bloomberg TV is the exclusive media partner at the event. Let me just tell you, we are seeing European equity markets on the back foot this morning, down by 0.3%. Travel and leisure in focus, in particular to the downside. We'll have more details on where we are from a sector perspective shortly. Also coming up on the programme, the Lira and Turkish stock markets slumping after President Erdogan's surprise firing of another central bank chief. We'll get market action and analysis next. This is Bloomberg.
just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going. But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European market open. 30 minutes into Monday's trading session and things looking negative, down by around 0.25%. The Central DAX, though, trying to find its way to the upside. And we saw some of that last week with outperformance from the auto sector, and some of that continues. Let's have a look at the GRR, and you can see, indeed, we do have a continuation of that outperformance of the autos sector. That is part of the story to the upside. Technology often lifts the German market as well, and healthcare also in there to the upside. So a confluence of factors that could lift German stocks. To the downside, we do have travel and leisure as the biggest losing sector, and we've had some substantial moves within that. To the downside, I can tell you that Lufthansa is down by 4.7%, TUI, the tour operator, down by 6%. We see International Hotel, Consolidated Air, IAG, down by 6.6%. So basically, many of these European airlines responding negatively to tensions between the UK and the EU over vaccines, but also changing expectations for what is really going to be possible when you look in particular at the spread of different variants across the European continent, and to what extent we're going to be able to see some kind of normal summer. That is really a focus for markets this morning. Another focus for markets is very much what's going on in Turkey. Turkey now has its fourth central bank governor in under 2 years. The shock decision to replace Nasi Akbal has sent the lira plunging. He was only appointed in November and had sought to restore the central bank's credibility. His replacement is promising to use monetary policy to deliver permanent price stability. Joining us now is Christian Maggio, TD Securities Head of Portfolio Strategy. Christian, thanks very much for joining us. So we saw the previous central bank governor hiking rates, and then a couple of days later, he's out of a job. What does that tell us about central bank policy? What assumptions should we make about policy in Turkey from here?
Well, first of all, thanks for having me here. I guess that the answer to your question is pretty simple. Someone didn't like the hike. That someone is very likely President Erdogan, who recently spoke against high interest rates again. And in a couple of days, the central bank governor was out of his job, which means the next one has a different mandate. Otherwise, it would make no sense to just replace him. So we are to expect a lower interest rate environment going forward. And the lira is going to be the shock absorber, hence the move we have seen overnight.
Yes, indeed, and we see the lira down now by more than 10%. It's still got a 7 handle, but it had an 8 handle a little bit earlier on this morning. Is there further downside then, given what you've just said there, Christian, further downside from here for the lira?
I think there's still a huge downside. The first move was the first knee-jerk reaction. The lira is trading in early hours in Asia, but it's not very liquid. Then when Europe kicks in, you start to see more normal moves. But at the same time, you should expect the central bank in Turkey and state-owned banks to start sharpening up weapons to try and protect the lira. So a bit of ups and downs, even possibly a bit of strengthening of the lira in the short term is very likely and very possible. But they won't be able to lean against the wind, especially if the central bank decides to cut rates in the upcoming periods. So I think, yes, definitely the lira is set to mark new historical lows very soon, I think.
Yeah, this has been cut. The lira had been providing something of a carry trade, hadn't it, Christian? I was reading about how this news has ravaged a particular favourite of retail investors in Japan, which was around the lira yen and the dominance of lira yen long positions in that particular cross. Where does this leave, do you think, the carry trades that were attached to this currency?
Well, they're bleeding right now. It very much depends when you got in. Say that you got in November of last year when the previous governor, Agba, was appointed. You would still probably be modestly up. But if you entered later, if you entered this year, emboldened by the fact that you thought this was a new course and the central bank did, in fact, restore credibility in the past 4 or 5 months, then you're definitely under. If you entered recently, you're significantly under, which really tells you what is the carry trade that is needed to withstand this never disappearing risk with the lira is much higher than what the lira offers nowadays. So interest rates must be significantly higher for that risk to be reasonable in a portfolio.
Okay, and what does it tell us about other emerging markets at this time, Christian, or is there a link into other emerging markets? Clearly, a lot of this has to do with the politics in Turkey, and that, you know, stays in Turkey perhaps. But I'm looking at CDSs around certain other emerging market debt right now, and we see movement there. So should there be read across into other EM?
No, actually, I think it would be a mistake to extend to other emerging markets what's happening in Turkey. This is a very Turkey-specific thing. Now, today, the dollar is a bit stronger, so you see a bit of negative pressure on other currency markets, and it's easy to mistake that as a spillover effect. Indeed, there are a few markets where the spillover is more visible. These are high-yielding, high-beta markets like the Russian ruble, the South African rand, the Mexican peso. But if you see at how EM Asian currencies have traded overnight, they've traded in a pretty normal fashion, which means there's a barrier between them and the lira. So I think you may see a bit of spillover in some markets for some days to come as portfolio managers reassess the risk on their portfolio and perhaps offload some of that risk to counterbalance the losses mark to market that they're taking on the lira. But I don't think this will be a lasting effect. What happens in Turkey stays in Turkey, essentially.
Okay, so not too much of a lasting impact on other EM assets. Christian, thanks so much for your time. Thanks for joining us. Christian Maggio, TD Securities Head of Portfolio Strategy. Coming up on the programme, the results of AstraZeneca's big study in the US are in, and it shows the vaccine is 79% effective. We will bring you analysis and get the details on what it means for the vaccine rollout globally next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday.
We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the European Market Open. 39 minutes into a European trading session that looks negative for European stocks broadly, apart from Germany, which is fairly flat. Outperformance by some of the auto names there, and I see price targets for certain auto names hiked by Deutsche Bank. That headline just crossing the Bloomberg, so that goes some way to explain why we see a continuation of the auto sector outperformance. Very much a focus, though, to the downside on travel and leisure stocks. You can see the sector down by 1.6%. Some of the individual names within that down by more than 6% in the aviation space. Let's get back to one of our top stories, and that is around the vaccine rollout. The AstraZeneca vaccine was 79% effective in preventing the disease in a US clinical trial, paving the way for potential approval. Crucially, it had 100% efficacy against severe or critical disease and hospitalization. Joining us now with more detail, Sam Fazeli, who leads our pharma coverage for Bloomberg Intelligence. Sam, very nice to see you, and to see you in person, first time in a while. Let me ask you about these results then. This looks to be, from a reading of the headlines, looks to be good news, reaffirming efficacy of the AstraZeneca vaccine. What are your thoughts?
Yeah, good morning, Anna. Nice to be here. My thoughts are great. This is the biggest trial that they have conducted so far. It's the simplest trial, 2 arms, 1 placebo, 1 vaccine. So we got the cleanest data set we could have got, and thank God that it's actually 79% and not 50%. We were worried that given that it's a short interval between the 2 doses, only 4 weeks, given what we'd seen in the UK trial, that would not be as effective as what it turned out to be. So it tells you now something was odd in the UK trial to come out with that kind of lower efficacy of 53% or 60%.
And this is interesting in a UK context. This is interesting because this is not the 4-week gap between the 2 vaccines is not what is being done on the ground in the UK. In the UK, a bigger gap is being used, isn't it? And I mention this because, of course, we have a lot of real-world data now on how this vaccine is performing because of the rollout in the UK. So how does this add to our understanding when we've already been seeing it used in the field, in practice already?
Yeah, so this actually backs the real-world data that we've been seeing. But remember, the real-world data is based on 1 dose. This is based on efficacy of 2 doses. So the question you have to ask yourself is, what happens if this trial had been done with 12-week interval or 8-week interval? Now, immunologists and vaccinologists say actually the longer. I mean, no other vaccine, there are very few vaccines that have got short intervals like this. Most of them are a month, 2 months, or 3 months, or even longer. So this corroborates the real-world data, and let's hope, fingers crossed, that actually a longer time window gives you even better efficacy and longer-term protection.
A lot of this vaccine has already been made in the US. There's quite a bit of it already, and now does this pave the way for approval of those stockpiles to be used?
Well, this is a gold standard clinical trial. If this isn't good enough, or if there's a detail in there that we are not seeing and the FDA will see, then I'm not sure what would be good enough. This is good enough, as far as I can tell, for an approval in the US.
Okay, so this seems to point in that direction. But what about the question about rare side effects? They had some positive language around that in these results today. Did that add to our understanding?
Yeah, no, I'm not going to put any weight on that whatsoever. It's 30-odd thousand patients. You need hundreds of thousands to start to see those very rare side effects. The average side effects, I mean, we haven't seen the data. I wouldn't be surprised if it's just the same as what you would expect with all the other vaccines.
The regulator in Europe, or for Europe as a whole, says that this vaccine can be used for all adults, doesn't it? But there are certain countries within the EU that have specifics around which age bracket, for example, this vaccine can be used on. Do you think that this trial data might shift that conversation at all?
I would love to see that happen, Anna, because we've had it no good for over 55s. And now, oh, no, we must only give it to over 55s. And then if this trial shows, which is what they're saying, 80% efficacy over 65, which is the same as the whole trial, suggesting that younger people get the same efficacy, then so that comes back to that question of why are you keeping it just for a certain age bracket, aside from the worry that it was young people who were seeing those rare side effects.
Yeah, okay, something to keep an eye on. Thanks very much, Sam. Thanks for bringing us the analysis. Sam Fazeli from Bloomberg Intelligence. Let's focus in on France now. And last week, President Macron announced a month-long lockdown of several regions, including Paris. This slowing down the country's economic recovery comes as it struggles to contain a third wave of the pandemic. Joining us now is Philippe Juvin, Pompidou Paris Hospital head of the emergency unit and a former politician. Philippe, great to have you with us. Thank you for joining us. Do you think that Paris now has the right measures in place for Paris at this time?
I'm not sure because, you know, the situation in Paris hospitals is very critical. We lack beds, intensive care unit beds. Imagine we have in the Paris area about 13 million inhabitants, and we have only 1,200 beds for intensive care units beds. It's not enough.
So do you think that President Macron has waited too long to lock down Paris, or do you think that the lockdown should go further to other parts of France?
Both. We spent time to wait for I don't know what, and the decisions which have been taken last week are not sufficient. Why? Because what are these decisions? First, a nighttime curfew, which starts at 7 p.m. It was previously 6, and inter-regional travel prohibited. But except that, we have also some shops selling non-essential goods and services closed. But I think it will not be enough. When you compare to March last year, it was efficient last March because a lot of things were closed. It's not the case now.
Philippe, how do you evaluate the willingness of the French public to take the various vaccines at the moment? It seems that France, even before the rollout of COVID-19, there was a particular problem with vaccine hesitancy more broadly in France. What are you seeing at the moment in the data?
Well, people are skeptic. You're right. But the more we are going to vaccinate, the more people want to be vaccinated. And we have to vaccinate massively, and then you'll see people who will want to be vaccinated. And it's a constant problem about vaccination, not only with COVID-19 vaccines, but also with previous vaccine. But I think that I'm sure that if we propose people to be vaccinated, at the end, they will accept it. Of course. And the problem is that we have no enough vaccines to give people.
And you do see some different variants, Philippe, in France compared to other parts of Europe. Which of the variants are you most concerned about? Are there certain variants that you think might struggle, or the vaccine might struggle against them, or is that unknown?
Yes, even if we don't have a critical situation right at the moment, there is a realistic possibility that variants will continue to evolve that have a potential to avoid vaccine immunity. You know, the more the virus is going to replicate, the more it's going to mutate. Currently, we have a problem with the UK variant. But as you know, that this variant is vaccines are efficient against this variant. The problem is if we don't perform a massive vaccination, the risk is to observe new variants, French variant, for example, and then they could avoid vaccine immunity.
A lot of people in Europe are thinking about the summer and how normal or not normal the summer is going to look. Philippe, from your position, sitting there in Paris at the coalface, at the heart of this operation, do you think that the summer can involve vacations, can involve holidays, or is that just not at all what the future looks like to you?
It's difficult to define the future, but well, if we have no vaccine, if we have no more intensive care beds units, it would be difficult to have a normal summer. I heard Thierry Breton, the European Commissioner, he said yesterday that all will be finished at the middle of July. I think it's not correct to say that.
You mean the vaccination rollout?
Vaccination rollout and the end of the pandemic. Is it realistic to imagine that we will be able to vaccine all the French population in 3 months? Really, I'm not sure.
Philippe, thank you very much for joining us. Philippe Juvin, Pompidou Paris Hospital, head of the emergency unit. Thank you very much for being with us this morning. Up next, we talk more about what's moving the markets with Laura Cooper, Bloomberg Market Live macro strategist. Markets focus very much on that vacation story, on the extent to which we will not be able to travel, and that what seems to be what is sending some of these travel and leisure names lower today. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European market open. 52 minutes into our European trading session, and the Xetra DAX was threatening to turn positive for much of this morning, and indeed it has. So the DAX is flat to positive. Other equity markets in Europe under pressure. So we see this outperformance of autos, underperformance by travel and leisure, and that is being reflected in those overall market moves there. Let's just check what's going on with some Turkish assets, because that is a real focus for markets as well. We've seen the Turkish Lira down by as much as 15% within session today. It's down by 11% or so right now. The equity market down by 9.7%, and in particular the Borsa Istanbul saying they're asking people to behave within the rules, and they are in particular focused on short selling in the Turkish market today. We also see movement in the Turkish 10-year yield. Let's start with Turkey with Laura Cooper, Bloomberg's Markets Live macro strategist. Laura, interesting, a lot of guests saying today, you know, there isn't much read across into emerging markets, or there shouldn't be in the longer term or in the medium term, but in the short term we do see read across into European banks. We also see some limited read across into some emerging market assets through the dollar.
Well, we are seeing that knee-jerk reaction in markets, but as you say, I do think that this is largely an idiosyncratic concern that's isolated within Turkey, and that's because the contagion risks look contained. If we look at emerging markets, how they fare now, relative to when we saw that turmoil in Turkey in August of 2018, we have actually seen foreign flows are less tilted towards those vulnerable countries. And as well, the same can be said for European banks. If we look at what the BIS reporting exposure is to Turkey, European banks are less exposed. So I do expect that we are potentially going to see further pressure on the lira, depending on near-term state intervention, but ultimately any knee-jerk sell-offs that we are seeing in emerging market currencies are likely to be short-lived.
So that's likely to be short-lived. We're certainly seeing knee-jerk reaction in travel and leisure stocks then, Laura, to the headlines around extended lockdown measures for various parts of Europe and the fallout, the tension between the UK and Europe when it comes to vaccinations. Travel and leisure down by 1.2% this hour. This is something that surprised the markets, I suppose. It must have done, to see the extent to which some of these travel and leisure names are under pressure.
Well, and I think the reason why we are seeing those particular stocks come under pressure is because European equities have really priced in a lot of good news on the recovery front. We have seen the DAX near record highs last week. The Euro Stoxx 600 has performed quite well as well. And those are just reflective of these forward-looking markets looking at these economic recoveries. So I do think that some stumbles are likely in the near term because of what markets are pricing in. And notably, that captures the divergence that we are seeing with the U.S. So in terms of sluggish vaccine rollouts, and just in terms of the fiscal impulse alone is going to be potentially a headwind to Europe, whereas a tailwind to the U.S. So certainly something to focus on.
Yeah, something to focus on. And indeed, something else to focus on is a continuation of last week's theme through all that. And despite the headlines about continued lockdown in Germany, a continuation of the trade around autos that we'd seen, and European German autos in particular trying to up their game when it comes to EV. That seems to have legs into this week. Autos doing well.
Absolutely, I mean, certainly when we saw what Volkswagen did, their recent performance has just been quite spectacular, actually replacing the next, largest market cap stock on the index. So whether that can actually be sustained remains to be seen, given the exceptional gains. But I do think that Europe's exposure to those cyclical, to those value trades, against a backdrop of really the U.S. reflation trade and ultimately economies reopening, can continue to support European equities, even if we do have some stumbles along the way.
Laura, thank you very much. Laura Cooper, Bloomberg's Markets Live macro strategist here in London. Thank you very much for joining us. European equity markets then under a little bit of pressure this morning. I should mention, in terms of the US picture, NASDAQ futures point to the upside, up by 0.4%. Elsewhere, futures in the US also under pressure this Monday. This is Bloomberg.
going to see an extremely strong year, and I think that strong year is going to lead to price pressure. I want to emphasize inflation's not a one-year phenomenon, it's a multi-year phenomenon.
Clearly, Greensill is a distraction and is something that we're working through now, but the operational results we had in the first 2 months shows that we're on the right path.
It's a serious topic. The whole industry is affected. The capacity is too low for all players like automotive industry and consumer electronics. And so it's a troubleshooting day by day.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from London, Berlin, and New York on this Monday, March 22nd. Our top stories today. Turmoil in Turkey, the lira plunges after Erdogan fires the head of the central bank. A potential spin-off at Credit Suisse, the Greensill capital scandal, has a Swiss bank looking for ways to separate itself from its wealth management unit. And Tesla 3000, that's Cathy Wood's stunning new price target for Elon Musk's electric car maker. Well, there's quite a lot going on. I was trying to do, Kaylee, my top 5 stories today. There are about 12 top stories, but I have to say Turkey kind of dominates everything with the fourth central banker in less than 2 years.
Yeah, Turkey definitely dominating the narrative this morning, Francine, and it is the outsized move in the FX market that really has my attention this morning. The Turkish Lira at one point down something like 17% against the dollar. It is still weaker right now by the tune of about 10.5%. Dollar Lira sitting at 7.97 at this point. Of course, we also got some news out of the Middle East over the weekend, Francine. Earnings from Saudi Aramco, and is going to pay out its $75 billion dividend despite all of the turmoil we have seen in the oil market this year. And speaking of oil, Brent crude continuing its declines after its worst week since October last week. Right now, it's sitting around $64 a barrel. And of course, the story we continue to pay attention to, both Europe and here in the U.S., is AstraZeneca. The stock is higher by about 1.25% in European trading. Yes, drama around its vaccine with the European Union, but a U.S. trial shows 79% efficacy, so that aiding sentiment this morning. Here in the U.S., it looks like it's going to be a mixed picture come the opening bell. S&P 500 futures now basically flat. The outperformance coming from the NASDAQ 100 with futures up 0.5% as we see yields coming in down 4 basis points on the 10-year. We're now sitting just around 1.68% as the dollar is basically flat on the day. And as for some movers in the pre-market this morning, Kansas City Southern, the outsized performer to the upside. It is up 15% before the bell after Canadian Pacific Rail agreed to buy the company for $25 billion. But elsewhere in transport and travel, not a great day. Stocks like United Airlines and Carnival Cruises lower to the tune of 1.5% to more than 3%. Maybe what's going on in Germany, Matt, is part of the reason why sentiment in the travel space is not so great this morning.
Yeah, absolutely, Kaylee. We're looking at new lockdowns, or rather extended lockdowns, and they're even more serious. Although I will show you a little bit later why that's actually done Germany quite a lot of good in terms of cases. I want to talk about what we're watching this week. The Credit Suisse chief executive has told Bloomberg he'd consider spinning off the bank's asset management unit. Thomas Gottstein spoke exclusively as the Swiss lender seeks to put the Greensill capital scandal behind it.
Clearly, Greensill is a distraction and is something that we're working through now. But the operational results we had in the first 2 months shows that we're on the right path.
So always paying attention to what's going on in banking, obviously. Let's get over for more with that to Danny Berger. Danny, what else do we hear from Gottstein?
Well, it's really clear that he's concentrating on the reputational fallout of this, really characterizing it as an issue that is just concentrated in the asset management unit. And because of that, he also told Bloomberg one of the things Gottstein is considering is spinning off the asset management unit. So that would be putting it in a holding company, taking it completely out of the bank. Now, he's already replaced the head of the asset management unit. He's already taken it out of the wealth management division as well. So this would go even further. Now, to some degree, yes, it is a concentration in asset management. They just had their best start to the year in about a decade, but we've seen potential damage with relationships with clients from rich individuals in the Middle East to Swiss pensions, all of them expressing anger. So there are key relationships at stake here that Gottstein has to deal with.
Danny, thank you so much. Danny Berger there with the very latest on Credit Suisse and its potential asset management spin-off. Now, elsewhere, the Turkish Lira plunging as much as 15% against the dollar after President Erdogan ousted the country's third central bank governor in less than 2 years. Well, Bloomberg's Justin Carradine joins us now. Justin, it's also having an impact on some of the European banks that had exposure to Turkey, and it's also having an impact on other emerging market currency. How much of this was a complete shock?
How much of it is a complete shock? Well, the market reaction is not a shock. What was a shock was the decision at the end of last week by President Erdogan to remove Naci Ağbal from the position as governor of the central bank and replace him with Sahop Kavcıoğlu, who is quite a prominent critic of the recent monetary policy that's been prevailing at the central bank. That's to say, interest rate increases designed to shore up the lira and tackle inflation. So what the market is saying here is that it's expecting a complete change of direction and ultimately laxer monetary policy that will simply fuel inflation and ultimately see a continued weakening of the lira.
Justin, thank you so much. Justin Carrigan there with some of the surprise, of course, being the ouster. I think we're on to central bank governor number 4 in about, less than 2 years. Matt, I'm also looking at some of the European banks, and I know BBVA, that has quite a lot of exposure to Turkey, is down some 5%. So the read across and actually the fallout from what we're seeing in Turkish lira moves is actually quite significant.
Yeah, absolutely. And what we're seeing in the real yields there, I mean, if you're brave enough to wade in or maybe stupid enough to wade in, are pretty attractive as well. So definitely a story with a lot of volatility, a lot of trading around it, and a lot of drama, to be sure, Fran.
Yeah, it's amazing how, after the U-turn that we saw from President Erdogan, it kind of, we're back to maybe where we were 2 or 3 years ago. Coming up next, we'll have a full roundup, of course, of the Turkish Lira story. We'll look at moves and possible repercussions on other emerging markets with John Hardy, Saxo Bank head of foreign exchange strategy. And then after that, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. We'll talk to him about the AstraZeneca vaccine and the spat between the UK and the EU. That's at 5:30 a.m. in New York, 9:30 a.m. in London, and this is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, I just want to quickly point out the GMM function is one that I hit up every morning to see if there are any big moves, wild swings, and today there are a heck of a lot of them. Take a look at my global macro movers screen. Now, anything that you see in red is obviously down and green is up, but when you see a black box, that denotes that the asset in question has moved more than 3 standard deviations away from the 30-day Z-score. So a big move indeed. You can see a lot of black boxes around Turkey in terms of the stock movement, in terms of the lira, in terms of the bonds, and then altogether a ton of black boxes around sovereign CDS. So some real movement in this Turkish market, a huge surprise to all of the players today. John Hardy joins us. He's the head of FX strategy at Saxo Bank to help us understand what's going on. John, is this just, you know, at Erdogan's whim, he roils markets?
The whiplash is really incredible. I mean, here you have, and the timing here, I mean, you had last week on Thursday a central bank that moves more aggressively than expected to counter sort of the recent weakening we'd seen in the lira. Market responded in kind, as you would expect, to such a dramatic move. And then you get a move in the opposite direction over the weekend where Erdogan apparently found himself agreeing with a newspaper columnist and economist who believed that these policies were misguided, and it was his original position anyway, and has been for a long time, that these orthodox measures of raising rates to counter inflation simply don't work. And so it all adds up to a tremendous whiplash and a tremendous gap when you have such a shift in expectations versus a sudden dawn of a new reality coming into a new week. And of course, flow aggravates and lack of liquidity aggravates the size of the gap. But yes, but John, it's considerable.
What I don't understand, and this is probably why the market wasn't positioned for it, how does the president benefit from actually sparking the lira crisis?
Very good question. I've struggled to see it myself, and the market is struggling to see that as well. And, of course, a weaker lira at the margin helps to stimulate the manufacturing productive side of the economy, makes exports cheaper. The tourist season this time around is probably going to have to be written off in part once again. That helps, of course, on the tourism front for the next tourist season. But beyond that, when you starting off a new currency, a potentially currency crisis with effectively no reserves, it's not a pretty picture. And the whole capital controls question is going to be raised rather quickly again at some point as well on all of this if the lira does continue to weaken, which I suspect it might, and if they follow through with actual rate cuts now, which of course is the assumption.
I'm looking at BBVA, I think, which has about $60 billion in Turkish assets, and earlier on it was down some 5%. John, what does it mean for other emerging market FX? I know there was a note out by Morgan Stanley saying, if you're South African rand, if you're a Russian ruble, you could be taken down with this move.
Well, I've found that if you look at how the behavior in the Turkish lira has been versus the rest of emerging markets, it's pretty idiosyncratic. It's its own story. Now, of course, if there's a reassessment by, you mentioned BBVA and credit into the EM space more generally, but here you have an actor that is a bit unique and doesn't behave like most emerging market actors. So for now, as long as the situation remains relatively contained, I don't see really the risk of contagion into the EM currencies as an asset class or EM assets in general.
I do want to bring just some breaking news to all of us, John. Turkey's credit default swaps just jumped the most on record to 472 basis points. So clearly this crisis is spreading far beyond.
Wish you owned those.
Yeah, exactly, Matt. Obviously far more than just the lira. But on EMFX more broadly, which you were just speaking to, how do you factor in the higher U.S. yields and stronger U.S. dollar story in that? How strong are the near-term headwinds?
You're very right to point to the U.S. dollar, because if you look at a chart of emerging market returns over time and put that up versus a chart of the U.S. dollar, I mean, the U.S. dollar is the lifeblood of the global economy, and those two are very correlated. So if obviously if U.S. long yields continue to rise and rise aggressively, this will continue to push back against EM assets. And I think that was one of the key pushbacks against the Turkish lira and, of course, other emerging market currencies recently was, of course, that rise in U.S. yields. So it's critical stuff. I don't expect any dollar firmness to extend much longer here. So I think that source of particular concern will be, on the back burner to a degree. But in the meantime, if we do have a further spike in U.S. yields, which I do see as a potential risk, that could create over the next couple of months to 3 months before we realize what the Fed is going to do about it, which I think they must eventually. This could, of course, create some further unease in the EM space for sure.
Obviously, that swap movement is huge, and to see the yield soar like that is unfortunate, I suppose. On the other hand, real rates, John, I'm looking at Turkish real rates here jumping to the highest level that we've seen them in basically a couple of years almost. Is this going to attract investors, or is the volatility just too difficult to stomach?
Well, what happens to the real rates when the currency devalues again? So if the currency falls 20%, those real rates are going to look very, very different very quickly. So I think what you need to see is the current account coming into balance by simply the weakness of the currency, meaning that people can't afford the imports. And you just see the export side swinging into gear and a post-vaccine, post-COVID recovery. I think that's the only road out of this. And in the meantime, I just really wonder how they're going to deal with the risks if trust in the lira on the domestic front is so profound that it triggers capital flight. Again, I think this eventually points towards the risk, or the fear at least, of some sort of form of capital controls. And these run the gamut from soft to hard capital controls. So that will be what I'm looking for if dollar tries at 8 or above. Let's call it in a week, and continuing to weaken the Turkish lira.
Do you see a lot of trading in this market then right now, John, or do you think people are, hands off for a moment to try and see what goes on?
Well, the scale of the reaction speaks to people being forced out of positions, and there's trouble for the liquidity to catch up. But given the number of questions I've had on the Turkish lira, it's one of those currencies that's moving a lot in an environment where a lot of currencies aren't moving so much. So there's been a lot of interest on the speculative side in this currency, and people have since the move towards a more orthodox approach. There's been a tremendous trade there and trading for a stronger Turkish lira. So I think a move like this will discipline that, but there's certainly a lot of interest in the lira.
John, I'm also looking at euro, and actually euro seems to be testing the 200-day support against the U.S. Now, this also goes back to some of the weakness that we could see in European banks because of Turkish lira. It also goes back to some of the vaccinations. Is euro one of the most difficult currency to get behind in the next 6 months?
Well, yeah, it's difficult to like the euro in an environment where we've been talking so much about rising U.S. yields, when you're talking about the fiscal dominance in the U.S. versus the difficulty of getting on the road to fiscal in Europe. Europe, however, does enjoy that fiscal stimulus from the rest of the world. It is a demand thing. So when you stimulate it, it stimulates externally in the U.S. and elsewhere. It stimulates EU exports. So that certainly helps. But offsetting that, we have the bumbling vaccine rollout. That's going to cost a few months. It's going to cost another big portion of another tourist season, which is very costly for Southern Europe. So it's a drag now, and it could be a drag for another few months. Let's call it 115, 116 in euro dollar. But I just don't see how the U.S. A dollar continues to rise beyond that. If you're going to have higher U.S. inflation, that's going to mean lower real yields in the U.S. And yields at the long end can only go so high before the Fed would be forced to step in at some point, given the massive back end of this year Treasury issuance that will be required to finance these staggering U.S. deficits. So the dynamic to me is uncertain, potentially more dollar strength, more euro weakness here for a month or two, but eventually I'm seeing it turning around.
What about sterling? So it's already, or again, testing some of the resistance levels. They're doing a great job in the UK of vaccinating people. Do you hold on to sterling?
Yeah, I think maybe it's had a bit of a run here. It might be worth considering whether it's going to consolidate some of those gains for a time. That vaccine story will quickly fade in another few months because we're always looking ahead of the curve here. And then the question will be about real UK rates down the road as well. The fiscal dominance there, higher inflation there. Are you getting compensated with the yield? If not, then I think to a degree, the UK could find or the sterling could find a rather low ceiling, even if there is a few more percent there versus the euro and certainly versus the US dollar for the cycle.
John, thanks very much for joining us. John Hardy is the head of FX strategy at Saxo Bank, talking to us about this breaking story which has caused so much turmoil in the FX markets. Coming up later today, the CEO of Volkswagen of America, Scott Keogh, comes on Bloomberg television as the market cap of the company continues to soar. Volkswagen really lifting the DAX today. He joins us at noon New York time, 4 p.m. London. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lines in New York. Now let's get straight to the Bloomberg First Word News. And in Germany, Chancellor Angela Merkel has proposed keeping lockdown restrictions in force for another 4 weeks. coronavirus cases have risen above a level that may prompt government action to avoid healthcare overload, while Merkel and regional government leaders will discuss their options today. U.S. Defense Secretary Lloyd Austin made a surprise trip to Afghanistan. President Biden is trying to decide whether to keep U.S. troops there, and Austin told reporters that Afghanistan's violence level remains, quote, pretty high. A peace deal reached last year calls for the 2,500 U.S. soldiers there to be withdrawn by May the 1st. Well, President Biden says that deadline would be tough to meet. And it's the biggest purchase of a U.S. asset by a Canadian company since 2016. Canadian Pacific Railway has agreed to buy Kansas City Southern for $25 billion. The combined railroad seeks to create a 20,000-mile network linking the U.S., Canada, and Mexico in the first year of the new trade alliance. And Cathie Wood's ARK Investments expects shares of Tesla to hit 3,000 by 2025. Well, that would give Elon Musk's electric car maker a valuation of almost $3 trillion. Tesla shares are currently going for $655, while ARK expects there's a 50% chance of Tesla achieving full autonomous driving within 5 years. I mean, it's such an amazing story, first of all, because people listen to Cathie Wood. Of course, she's also talking her own book, but it's just such an amazing target. First of all, because of the outstanding shares, Matt, it'd be worth $3 trillion. Never seen anything like it. And then we put that against what happened with Volkswagen after your fantastic interview where they go green. And you see, it's now the most valuable company also in Germany.
Yeah, but not nearly as valuable as Tesla. I mean, people have been coming up with these insane targets for Tesla for years, and then they've been mocked, and then Tesla hits those targets. So, I mean, look, whoever thought this would be a $600 billion company? And Cathie Wood, I think Shuli Wren writes an opinion piece today. Cathie Wood has really changed the way people invest. Retail investors listen to her, to your point.
Yeah, it's that whole active management within the ETF space, Matt. To your point, it's not just the giants like Tesla, which okay, could have a $3 trillion valuation. She picks small companies too, Francine, and that has been a big part of what has led to her outperformance, although that's not the case in recent weeks, Francine.
Yeah, there is a great piece, Matt's right, a great piece by Shuli Wren from our Opinion Now side of things. Now, coming up, pressure building around the situation at the U.S.-Mexico border. We talk with our Marty Schenker. This is Bloomberg.
valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. A lot going on in the markets, but this time it's emerging markets. And I have to say that Turkish central banker going because of President Ostimsu, that was kind of, I mean, the understatement of the year is to say it would be a surprise, Matt.
Asked him to. Yeah, I think when President Erdogan asks you to do something, you definitely say, okay. He's not somebody you want to disobey when you're in that country. You know what? I have been bummed out, though, about a headline here in Germany. We're going to have a continued lockdown for another 4 weeks if Chancellor Merkel gets her way, and it's really starting to hit me at my soul. Like, I can't go shopping. It's killing me.
I feel, Matt and Kaylee, like we've been here, stop and start, a lot of lockdowns. The only right way to do lockdown is to do it properly so that you get out of it quickly and then once and for all.
Yeah, I guess that's fair. I mean, here in New York,
we've been locked down for 5 months.
I've been kind of living my life.
We've never started.
That's the other thing.
So
a lockdown in Germany is different to a UK lockdown.
I mean, the only thing we can do is go to a grocery store and go to a barber. And obviously, I have very little need for the latter. So there's nothing to do here.
Yeah, that's one more thing that you're allowed. And schools are open in Germany, which is quite significant. Kaylee, let's go to the markets. Great. What do you see?
Well, it looks like it's going to be a mixed picture. You are seeing stocks lower on your side of the Atlantic. Here in the U.S., what is looking to outperform is actually big tech. If we just take a look at some of the movers in pre-market trading, it is the likes of Tesla that are moving to the upside. It's up nearly 2% in the pre-market. What is being weighed down a bit is the travel complex. To what you and Matt were just speaking about, Francine, there are renewed lockdowns in Europe. There are questions around when that return to normal travel is actually going to resume. So you're seeing stocks like Norwegian Cruise Lines down 2.7%. As for what's going on more broadly in the market, here in the U.S., big tech does look to outperform, as I said, with that outperformance for Tesla. NASDAQ 100 futures up by 0.6%. That, again, is a yield story. It is a consistent pattern. If I come into the office and yields are higher, you can bet big tech is down. When yields are lower, big tech is up. And that is the case today with yields coming in 4 basis points on the 10-year. We are seeing crude continuing its losses after its worst week since October. And of course, the story we are all watching this morning is what is going on in Turkey. The Turkish lira weaker against the dollar to the tune of 10% at this point, Matt.
Yeah, Turkey is definitely one place. I guess if I went there, I would be able to afford more stuff. But what I really want to go to Spain. I can't get a flight to Valencia. I'd love to go to Florida. I don't know how easy that trip would be. The truth is, I'm much safer, I think, here in Germany under lockdown. Look at this, COVID cases per million people. The German lockdown, which has just gone on forever, is annoying me, but it's keeping me healthy. Only 32,000 per million have gotten COVID in this country. Our line is at the very bottom. If you look at the line on the top, for those of you listening on radio, good morning in London, the U.S. is the worst, 91,000 per 100 people, followed in short order by Spain, the UK, and France. So maybe I'm better off, actually, Francine, here under Angela Merkel's never-ending lockdown.
Yeah, I mean, until they get it under control, certainly you're saving lives. Now, Asian markets closed mixed. U.S. and Chinese officials traded acrimony and accusations over 2 days of talks in Anchorage, Alaska, that both sides hope will clear the air. Now, the real work begins. Well, here to discuss all of this is Marty Schenker. He's Bloomberg News editor-at-large. Marty, thanks so much for making us smarter on U.S. politics on a Monday morning. When you look at some of the things that we found out over the weekend, there seems to be now a united front, UK, U.S., Europeans, and others in trying to confront China maybe as a unit.
Yeah, and I think that is part of the Joe Biden strategy. as opposed to his predecessors, is to unify our friends and allies in a common effort to try to counter Chinese predominance in a lot of areas. So I think that is the tack that the Biden administration is going to take, and I think it will lead to some discussions with the Chinese in the coming months.
Marty, when you look at the week ahead for President Biden, of course, he has a crisis at the border with Mexico. There's a number of other things that he needs to look at, including taxation. What will his priority be? Well,
I think he would like immigration not to be a priority, but I think events have a strange way of making that decision for him. The crisis at the border is going to be a critical thing for Joe Biden to get in front of, or else it's a political liability. At the same time, as Bloomberg News reports this morning, he's looking at taxing the wealthy as a way to pay for infrastructure.
You know what? I can't get over this tax story, Marty, because the wealthy already should pay a lot of money in taxes, trillions of dollars, but they don't because of loopholes, because of deductions, because they're smart enough to game the system, or they hire someone smart enough to game the system. Why doesn't the Biden administration focus on taking out the loopholes, taking out the deductions, and just making the system more efficient?
And Matt, you sound like politicians from the last 2 decades. Everybody agrees that loopholes and tightening the tax code is a good idea, but it never happens. And that's because of the vast amounts of lobbying that happens in Washington against any move that would close some of those loopholes. And getting something like that through Congress is going to be extraordinarily difficult. So the easy way is just to raise rates on the wealthy.
And do you think that that's going to pass then, Marty? Is there enough support for raising rates on the wealthy, or even for a wealth tax in the U.S.?
Well, the wealth tax is a non-starter. I mean, among other things, how you compute what someone's wealth is an extraordinarily difficult and politically charged process. So there won't be a wealth tax. What there may be is an increase in tax rates for upper income individuals. Whether that gets through Congress, actually the public may have a lot to say about that. And I have not seen any recent polling on taxing the wealthy, but my suspicion is that that'll be a very popular idea.
What about, you were talking about how immigration policy now is kind of a forced issue for the Biden administration with what's going on at the border. Is there any kind of consensus about what that policy should look like, and any way that that can get through in a bipartisan manner?
Yeah, Kayleigh, it's a great point. And immigration has been a lightning rod for partisan politics for the last decade or more. I mean, John McCain was the last bipartisan Republican to try and push through immigration reform, and ever since then it's been downhill. Everybody agrees something needs to be done, but nobody can agree on what.
And to kind of round it out and bring us back to the China conversation that we started this conversation with, we obviously have to keep in mind the context of what is going on here in the U.S. and the escalating violent attacks against Asian Americans. How important is tone as the administration and as politicians approach the China threat from a policy and competition standpoint in the way that that dialogue is then extended here in the U.S.?
Well, I think it's an issue that the Biden administration has said needs to be addressed with grace and with clarity. The Asia bias is something that the Biden administration has spoken out forcefully against. At the same time, they need to pursue a policy of confronting the Chinese where they need to be confronted. So it is a balancing act, and so far I think they've been able to do it.
Marty, thank you so much. Marty Schenker, their Bloomberg News editor-at-large, talking to us about everything Washington-based. Now, coming up next, we continue tracking COVID-19 with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. He's coming up next, and this is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, the European Union is escalating a spat with the UK over vaccine exports. Sources say the EU is ready to start blocking the export of AstraZeneca's COVID-19 vaccine to Britain. Well, for more details, let's go straight to our reporter in Brussels, Maria Tadeo. Maria, this is getting serious and it's getting ugly.
Yes, Francine, and there's two things happening this morning which once again really show that tension over supplies. And one is a Dutch production site in which the United Kingdom says they fear the rollout will be impacted if there's an export restriction from a Dutch manufacturing site. And remember, AstraZeneca right now is making vaccines. They have two sites in the United Kingdom, two in continental Europe, one in Belgium, the other one in the Netherlands. Now, over the weekend, a European official told us that they don't have an official request yet from that Dutch site, but if they do get it, it will likely be rejected. Now, the second one, which is on a much bigger scale now, is, of course, the United Kingdom and the Prime Minister Boris Johnson reaching out to European officials this week before a crucial summit to say that he is expecting them to honor their compromises and to also honor the fact that there is also an outstanding contract with the United Kingdom that needs to be respected. The problem here, Francine, is that the two sides are speaking in a way that they don't actually relate to the other's issues. What the Europeans say is that this is not about the United Kingdom, that this is about AstraZeneca. It's not the company or it's not the country, but it's the company. It's failed to produce those vaccines, and they do see that they have a legitimate right to ban some of those exports if it doesn't honor its contract. So again, it's escalating again, but the pressure is on a different point. For the United Kingdom, it's very much about the European Commission and the EU. For the EU, they'll tell you this is not about the UK government. It's really about piling on the pressure on AstraZeneca.
Maria, thanks so much. Maria Tadeo there in Brussels. Now joining us to talk about the vaccines, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. Dr. Sharfstein, we'll talk about vaccine nationalism in a second, but actually, is the U.S. going to approve AstraZeneca, that vaccine extremely controversial in France, Germany, and Italy and other European countries, but actually it seems to be efficient?
Well, we got a little bit of the word of the trial from the company, but what happens in the United States is the Food and Drug Administration does its own analysis of the data and then presents a very comprehensive memo to an independent group of advisors. And I think that's really going to be the key, because I'm sure people will have a lot of questions, and this is a chance to resolve them. If all goes well, I would expect FDA to authorize this vaccine.
How is the U.S. actually inoculating so fast and so quickly? In the U.K., we're doing pretty well as well, but actually a lot of people only had the first dose of the vaccine. The U.S. on that measure seems to be powering ahead.
Well, I think that is because the federal government is now fully engaged. You know, the Biden administration has been making this the top priority, and they are using the Defense Production Act. They are mobilizing the Emergency Management Administration. They are setting up mass vaccine sites. They are pushing vaccine to communities large and small. It's really what we call a whole of government approach, and it's a pretty powerful government when it sets its mind to doing something. And, you know, I also think that people have confidence in the vaccine for some very good reasons, so there's a lot of demand.
Has that increased the confidence in the vaccine, Joshua?
It is in many parts of the United States. I think people are seeing that their friends are vaccinated and everything went well. I think they're seeing that they're hearing they can do more things if they get vaccinated. And in general, the temperature is down on the politics of the coronavirus. We're just not hearing, so much confusing so many confusing messages coming out of the White House as we used to last year, for example. So it's a consistent message. They're hearing it from their governor, they're hearing it from their mayor, they're hearing it from their doctor, they may hear it from their faith leader. And that's, leading people who may have been in the wait and see camp before to really decide this makes sense for them and their families.
How long until, I have a big family in the great state of Ohio. Everyone has gotten both shots. How long until we see herd immunity start to pop up state by state?
Well, that is a question mark, and it depends on two things. On the one hand, it depends on how the virus behaves, and the other hand, it depends on how many people actually are able to be vaccinated, combined with people who have some immunity from being infected. And we don't know either of those factors yet. The virus could be mutating, and that could affect the challenge of herd immunity based on how quickly the virus can spread from unvaccinated person to unvaccinated person. And we don't know how resistant some people will be to vaccination. So, I think this is going to shift, as a few people have been saying, from dealing with excess demand to really trying to reach communities, answer questions, get vaccines to people in ways that they're most comfortable getting them. And I actually think the medical profession is going to play a really critical role. I saw a study recently that even people who have these political suspicions about the vaccine, they trust their doctors. And I think getting vaccine to physician offices and figuring out other ways to engage the medical profession is part of the long game here.
That's the vaccination story, Dr. Sharfstein, but when it comes to just the virus trajectory, that third wave in Europe that is keeping Matt Miller in lockdown in Germany, do you think that's going to extend to the U.S.? Is that coming for us in 6 to 8 weeks?
Well, it's a real danger, and we see that some parts of the country in the United States are not just plateauing, but they're seeing an increase in cases, and that very likely is being driven by variants that are more highly transmissible, and where there's some evidence for some of them that they're actually more lethal. So that's a big problem, and I'm very concerned, obviously, seeing the pictures of spring break in the United States and just hearing the idea that, okay, the pandemic's over. How many times we have to learn this lesson? Step by step, stay vigilant, get vaccinated, still distance, wear masks, wash your hands. We really have to win this. This is like a horror movie where it keeps coming back, and we need to, really stick with the program, and we will be successful. I mean, the future is bright if we can do that. I don't know what's going to happen, but I'm worried.
Yeah, I think we all saw those pictures of what was going on down on the Florida beaches over the weekend, and some of the arrests that were made in the Miami area. As far as obviously variants are the concern with this new wave, how much do we really know about the vaccines that are in circulation and their ability to protect against those variants?
I think we know that there will be some significant degree of protection, if not against any infection, against serious illness and death. So far, the vaccines have held up against the variants. I think the bigger issue for the variants is there's still a lot of people who are unvaccinated. And so if the variants are more highly transmissible, we could see a huge flare in cases and a bunch of people really sick or even dying before we get the population vaccinated. That's why it's so important to be careful. That's the urgent, immediate issue.
Joshua, Dr. Sharfstein, can you get COVID twice? And if yes, what's the implication for these inoculations?
So it is possible to get COVID twice, usually not in rapid succession, usually with at least a few months in between. There are a couple implications for the vaccinations. One is it is hoped that it's less likely to get COVID twice so quickly when you get vaccinated compared to natural infection, because some people get a very mild natural infection with kind of maybe a weak immune reaction, whereas you're going to get a good immune reaction to the vaccine. So hopefully it will last longer. Eventually, though, if people start getting COVID twice, or when that starts to happen, that'll be noted because there's a lot of research going on, and people may get a booster. That booster may be better aligned with the most concerning variants. So there's a lot of science still to be done to understand what's going to happen with the vaccine, but we have a lot of tools in the science toolkit to be able to respond to situations like people falling sick or the variants. And I think the key now is to, stay with that science, because that's our best weapon in the battle here.
Thank you so much, Joshua Sharfstein there, Johns Hopkins Bloomberg School of Public Health Vice-Dean. Something that we have not mentioned, but we will actually, next time Dr. Sharfstein is on, is also these variants, whether we're creating them because we're not vaccinating the emerging markets as fast as some of the Western economies. Now, coming up, Credit Suisse considering a spin-off of its asset management unit after the Greensill collapse. More from our interview with the chief executive, Thomas Gottstein. That's coming up next, and this is Bloomberg.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We are focused on finding the best solution for our fund investors. That's our priority. Our priority as a management team is to get the best solution for them. And in parallel, there will be an investigation. And I'm not going to speculate on the outcome of that.
One more question. If you split off asset management, do you foresee it actually being spun off into a completely separate entity, which could be independent?
That's potentially part of the plan, but the most important one is now it's its own division. It's in different legal entities. Having a holding company around that could be something we are pursuing.
Well, that was the Credit Suisse Chief Executive, Thomas Gottstein, speaking ahead of the bank's annual Asia Investment Conference. Bloomberg TV is the exclusive media partner of the event. So I'll continue watching Credit Suisse because there could be more fallout. Of course, Credit Suisse, because of Greensill Capital and the shake-off that we've seen there, really the scandal that led to its collapse, is contending with the worst crisis since a spying scandal hit Credit Suisse a year ago. Again, as a fallout from Greensill deepens, the bank is also grappling with litigation threats from investors, potential financial losses, and regulatory scrutiny. Kaylee, what are you watching?
I'm watching another company, Francine, and that is Saudi Aramco. Not only is it paying out its $75 billion dividend, but also the CEO, Amin Nasser, was very optimistic about oil demand for 2021. He expects it to be especially strong in the back half, and I wonder if that does lend support to the idea that this weakness we've seen in oil over the past week is indeed just going to be transient, Matt.
I've got a chart, Kaylee, and I'm watching something very closely connected to Saudi Aramco, and that is the car makers, of course. They have just been on an absolute tear. Look at this chart of Volkswagen, which is in yellow, and European car makers in blue, compared to the benchmark Stock 600. They're just ripping it up over the last year. So, with that in mind, coming up in the next hour, Steve Auth, Federated Hermes Chief Investment Officer, joins us. This is Bloomberg.
concerned that this is 2013 all over again and we have the tantrum. I think those concerns are overstated.
While traffic may continue to be weak, sales are improving.
The savings rate's likely to come down. I'm not sure that it goes all the way back to pre-pandemic levels.
The bearish argument around runaway inflation is not going to come to fruition, and they're kind of fattening themselves up for the slaughter.
If inflation ticks up above 2%, then the chairman's going to get a little uncomfortable. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Turmoil in Turkey. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance, live on Bloomberg Television. Tom Keene on vacation. Lisa never made it back from the ski resort. I'll be herding cats for the rest of this week. Lisa, equity futures unchanged on the S&P. It's about the FX market. It's about EM. It's the Turkish Lira with a monster move overnight.
Yeah, plunging about 14%. And I do want to say, Tom is not the only one allowed to go on sabbatical. I figured, this is as close to a sabbatical as I'm going to get. I can stay home and rest my legs after a long ski weekend. Look, very much about emerging markets, very much about the word idiosyncratic, John, which I'm sure we'll be talking a lot about. What is idiosyncratic and what is true, more pervasive risk?
Well, I think what is idiosyncratic in Turkey right now is that the leader of the country runs the central bank. And that's probably the biggest difference compared to many other countries at the moment. To see a 10% move. This is a country that has really built up some credibility over the last several months because many people believed that the Turkish leader, Mr. Erdogan, Lisa, had actually gone down a path that he would stay down, which is orthodox central banking. And now it's terribly unorthodox all over again. And we're talking about the president running the central bank. And the governor, the new governor, Lisa, does he actually get to do what needs to be done? Many people are doubtful of that this morning, which is why you see this massive move in the FX market.
And frankly, it's a huge reversal, right? I mean, I think this is what, the third central bank head that Erdogan has gotten rid of in 2 years. Basically, the one that was actually getting things under control and actually led the lira to one of the biggest gains since November versus the dollar. But there is a larger point here, John, and that is my question, which is policy risk. How much are we depending on policy to be a certain way? And how much does that risk, frankly, disrupting everything, whether it be the Fed, whether it be federal government with respect to fiscal plans, or whether it be the European Union? And I think that this is actually a key risk right now for markets.
Well, for EM, we're seeing that risk materialize. We saw the hikes last week from Turkey, Brazil, Russia, more still to come from Russia as well. So let's do a couple of things. Let's get you set up this morning. We'll run through the price action. Lisa will run you through the day ahead, and we'll sit on top of this big story that developed over the weekend. Let's start with equity futures in the United States. On the S&P 500, no sign of contagion here more broadly across the EM space in a big way, and certainly not in DM. If you look at S&P 500 futures right now, unchanged. Into the bond market, yes, some risk aversion. Yields lower by 4 basis points on 10s to 167.69. Within foreign exchange in G10, the Swissy stronger, the Japanese yen stronger. But these aren't huge moves of concern right now. Euro dollar 119 stable and going nowhere. Lisa, the story for me is very much at the moment contained to Turkey. The broader story, though, for EM, we saw it last week. Hikes in Brazil, hikes in Turkey, more to come from Russia as well. The theme is there. For EM, they have struggled with this move higher in Treasury yields over the last couple of months.
But, John, the idea that Turkey is the story today after the Fed did not extend that exemption to capital relief for banks last week, at the end of last week, is telling in and of itself. There hasn't been a massive disruption in treasuries in addition to what we've seen, despite $206 billion of treasury auctions that we're expecting this week. I'll run you through what I'm looking at for the week, for the day ahead. 9 a.m., we're going to be hearing from Fed Chair Jay Powell. He's speaking at a Bank of International Settlements conference, the Innovation Summit, with a whole host of other top that we're going to be talking about throughout the week. Then also today, Tony Blinken, Secretary of State, is traveling to meet NATO allies as well as European Union leaders. I am very curious to see how much discussion there is about vaccinations, the rollout. This affects everything. Global trade. It has to do with state diplomacy, as well as for perhaps some of the unifying elements to combat China's ascent in the global stage. And then at 10 a.m., U.S. February existing home sales. I'm interested in this, John, particularly because the February data has been so messy. We're in between payments from stimulus. We're in between a possible true reopening. And here we are. What can we rely on as a compass for investor appetite, for consumers' ability to spend? And home sales probably are a better indicator of that than probably anything else right now when we look at the economic data, John.
Speaking of messy, we had a 7-year auction several weeks back, about a month ago, and that was messy. A little bit later this week, we get $62 billion of 7-year notes come from the Treasury. We'll see that on Thursday. There will be a massive focus on this bond market and the amount of supply we've got to take down in the next several months, quarters, and years as well. Joining us this morning, I'm pleased to say, is Steve Orth, Federated Hermes Chief Investment Officer for Equity. Steve, great to catch up, sir. Disruption in Turkey. Disruption in emerging markets more broadly, does it do anything to change your outlook for this year, for the United States, for U.S. equity markets, Steve?
I just put out a piece over the weekend called Where the Puck is Heading at the Federated Hermes website, Jonathan, and our view is no. We think where the puck is heading once we get through this period of turbulence as we're adjusting here to these higher Treasury rates is higher on the S&P. We're sticking with our 4,500 for this year. We think 5,000, maybe something like that for next year. And we still like emerging markets here, by the way. Turkey is so bad it's almost good. I mean, it's been a mess for years. It's kind of really set aside by most investors as a separate kind of undefinable asset class. I mean, it really so relies on the politics over there. It's very hard to guess where it's going next.
Steve, I've got to jump in because you've thrown out two massive calls there all at once. One is 5K on the S&P next year, and then you're talking about Turkey so bad it's almost good. Let's split it down the middle and start with this S&P 500 call. 5,000 on the S&P next year. Steve, can you walk me through this call when we're looking at deceleration from 21 to 22 on GDP, why we can carry on pushing to these kind of levels?
Well, Jonathan, that's why I put out the piece, because I think the general view on Wall Street is kind of bullish on this year, but then wait till next year. It's going to be all turned bad again. And we just don't think that. I mean, if you just look at the trend rate of GDP growth and what we lost at a trend over the last few years, you'd have to grow 6 to 7% a year this year and next year just to get back to trend by the end of next year or getting close to it. And that doesn't count the 15% of GDP that's been thrown at this thing that mostly is still on the forest floor in the form of cash in corporates and in individuals. So, we just think the numbers are so spectacular when you run them on the GDP growth side, no one wants to say it because it just sounds too crazy. And then when you factor that through into earnings growth, remember, S&P companies make money on nominal GDP. We're probably looking here at nominal GDP growth this year in the high single digits and probably similar to that next year. That can get your earnings on the S&P well north of 200. And, we think a fair multiple we've been using for some time now is around 22 times on that number. And, you can get yourself up to 4,500, 5,000 pretty easily that way.
Okay, Steve, that might sound crazy to people, but a lot less crazy than saying that Turkey is so bad, it's almost good. Are you saying you're long Turkey right now, Steve?
No, we're not long Turkey, Lisa. We really don't do much in Turkey. Even in our emerging markets portfolio, we have almost micro-sized positions there. Remember, Turkey's actually not even a large part of the emerging market index anymore. It's really driven by what's going on in Asia and to a certain extent the recovery in Latin America. So Turkey, I think most seasoned international investors view as a separate case that really doesn't, kind of runs by its own drummer and has periods of up and then down and up again. It's kind of up and down, but it's a kind of like trip to Las Vegas. And we'd rather focus on the areas where we think we can analyze the fundamentals and get them right, rather than guess what.
Well, that's what I wanted to go at, Steve. This idea here that there's a lot of cash on the forest floor. How do you determine when it's going to be erupting into a fire, and how do you know when it's going to trickle into some of these less loved areas? I mean, how can you tell if, for example, the cyclicals are overvalued or if they have more room to run at this point?
Well, July 4th, write that down, Lisa. Okay, that's the day when simultaneously everyone comes out of their cave. We've never seen anything like this in the history of economic activity. You've got an artificial global shutdown being reversed by an artificial global restart. It's going to be a kind of stage restart, which is almost even better because obviously Europe and Latin America are behind us. But July 4th, the US and the UK, maybe Labor Day, Europe, maybe Christmas, emerging markets. But geez, you've got all this money sitting around waiting to be spent when people come out of that cave. So, we think the numbers are kind of hard to calculate using traditional models. A lot of the economists on the street, and by the way, even the Fed, are using very traditional models to forecast what happens with the labor rate. And it's based on the fact that in normal recessions, it takes years for the labor to come back into the economy. This time around, we have a gig economy where all of the unemployment was focused there. It's one of the most flexible economies in the history of economic activity again. And that activity is going to start up in a big time in the course of the summer. And we think the problem is going to be finding gig workers right now, not getting them to come back. Some of them have, some pretty good benefits and things. Those will start to run out. And a lot of those folks want to work nonetheless. So you're going to see activity really pick up in that sector, just adding fuel to an already raging fire. And now we've got this 1.9 trillion thrown on top of it. We didn't really think that was necessary other than the targeted amounts for the folks that are really struggling. But here we go.
Steve, here we go. And let me tell you, I don't know many people waiting until July 4th. Let's be clear about that. Stephen North, good to see you, sir. Let's catch up again soon. Federated Hermes Chief Investment Officer for Equities. And Lisa, isn't that the truth right now? The people you speak to, family members, we're just getting out and doing it already ahead of July 4th. They are not waiting for this.
All you have to do is go outside and take a look at what it looked like over the weekend. I mean, the weather was better, and frankly, everybody was packed into restaurants. The restaurants looked full in New York City, which raises a question, do we get to July 4th, or is it longer than that? I mean, you've got, for example, Miami Beach shutting down and having a curfew because of all of the revelry going on that is maskless right now, John.
And in Europe, it's a very different story. We're talking about extending lockdowns and the spat between the UK, the European Union, and AstraZeneca, the tension building once again over the weekend. We'll try and touch on that a little bit later this morning. Good morning to you all worldwide. Tom Keane out of the building. He'll be back with us next week. Lisa Abramowitz taking what looks like somewhat of a break from home after a long weekend skiing. Did you sprain your ankle or something? What happened? What happened?
Well, we'll discuss it. We'll discuss it in detail at 9:15 a.m. on the Open.
I look forward to that. You're going to make a guest appearance on the Open. That'll be fun. In the bond market, yields in 4 basis points on 10s, 168.22. In the FX market, it is all about a Turkish Lira. Weaker. Dollar Lira down around about 8.9%. And S&P 500 futures, it's as if nothing has happened. Unchanged on the S&P. From New York City this morning, good morning to you all on this Monday morning. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. A clinical trial could pave the way for the US to approve the use of the AstraZeneca coronavirus vaccine. The trial found the shot was 79% effective in preventing the disease, plus an independent monitoring board identified no safety concerns. The Astra vaccine has faced numerous setbacks, most recently over possible side effects. Richmond Fed President Thomas Barkin says the U.S. economy is set for a strong 2021 that will lead to higher prices, but he doesn't think that means unwanted inflation. Barkin told Bloomberg that inflation is a multi-year phenomenon, not just a one-year issue. And in Germany, Chancellor Angela Merkel has proposed keeping lockdown restrictions in force for another 4 weeks. Coronavirus cases have risen above a level that may prompt government action to avoid healthcare overload. Merkel and regional government leaders will discuss their options today. U.S. Defense Secretary Lloyd Austin made a surprise trip to Afghanistan. President Biden is trying to decide whether to keep U.S. troops there, and Austin told reporters that Afghanistan's violence level remains, quote, pretty high. A peace deal reached last year calls for the 2,500 U.S. soldiers there to be withdrawn by May the 1st. President Biden says that deadline would be tough to meet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Hate and violence often hide in plain sight. It's often met with silence. That's been true throughout our history. But that has to change, because our silence is complicity. We cannot be complicit. We have to speak out. We have to act.
President Joe Biden is speaking out on an important topic: violence against Asian Americans here in the United States. Not pretty, what we've seen over the last several months. In fact, for that community for a long time. From New York City this morning, good morning. For our audience worldwide, alongside Lisa Abramovich, I'm Jonathan Ferro. Tom Keene is on vacation, taking a well-earned break. I'm laughing because he always gives me a hard time, so we'll be doing a lot of that this week. In the equity market, the S&P 500 up a couple of points. On the S&P, we advanced by a little less than 0.1%. In the bond market, yields come in 3-4 basis points on 10s to 168.22. Yes, we are just a little bit risk off. If you look more broadly at bonds, at FX, the Swissy, the Japanese yen outperforming, but the real story is Turkish Lira. Dollar Lira down by about 8.9%, 786. We had an 8 handle overnight. Once again, the leader, President Erdogan, deciding to get rid of another central bank governor. The new central bank governor, no doubt, will tell you that he will focus on price stability. And Lisa, the interesting thing about this is what this central bank governor believes will lead to price stability. He believes in a policy not unlike what we've seen from the Turkish leader, that somehow higher interest rates lead to higher inflation and lower interest rates lead to lower inflation. So when this particular central bank governor tells you that he'll focus on price stability, we have to try and understand what he thinks leads to price stability. And for him, it's a little bit different to what we see elsewhere.
And there's also a question why President Erdogan thought that the former governor was not doing the right thing, because he actually had achieved a bit more of price stability and more credibility for the lira on the global stage. So you have a situation where what he was doing was working, and then he was ousted. What kind of message does that send, John?
If you hike 200 basis points as the central bank governor of Turkey, you might not last very long. I think that's the message that he's trying to send to the new central bank governor of Turkey. So that's the market story. Let's turn to the politics and bring in Bloomberg government's Emily Wilkins down in Washington, D.C. Emily, great to see you. Let's start with this. The president's health going into the weekend. There was a stumble going up the steps to Air Force One. What have we heard in the last couple of days?
Yeah, so President Biden took it was a sort of a brief stumble. It was stumbled 3 times within like 3 or 5 seconds. And then he finished climbing up the stairs to Air Force One, sort of did his salute and went into the plane. But I mean, the thing here is that President Biden is 78 years old. That is very old for an American president. If you sort of look at the average over time, there were questions about President Biden's health going into his administration. And so little things like this, even though he recovered and continued walking up the steps, are bound to get a lot of discussion. At this point, the White House has said that it's no big deal, that he's perfectly fine, but it's something I think that a lot of people watch for, just given President Biden's age.
And not just focused on President Biden, we were doing the same things with President Donald Trump on the very same issues, in fact, on the very same thing, the ability to walk up steps and down steps, Emily. We'll turn to that for another day. On policy, the real policy over the last week, the headlines has come from Secretary Blinken around foreign policy. Emily, what are you looking at this week, going into this week, and what should we be focused on?
So I definitely think that there's a lot of interest in foreign policy, particularly after the U.S.'s meeting with China in Alaska, as well as other issues going on in the Middle East. But one of the things that I'm actually keeping an eye on right now is the southern border, the U.S. and Mexico. We saw Homeland Secretary Alejandro Mayorkas going down there with a group of bipartisan senators on Friday. We heard him make the talk show rounds on Sunday with a message that the border is closed for families and for single adults. Of course, they're saying that they're not going to be turning away small children who come to the border, but there's a big question on what to do. President Biden ran saying that he would be more humane to immigrants who come to the border than former President Trump. But on the same time, you've seen a surge in individuals showing up at the border, and a question about exactly what the Biden administration needs to do to stem that flow.
Yeah, and there's a question certainly about how the political environment is going to receive what President Biden is doing on the southern border. I want to just sit on China, though, for a second, because we have been hearing a lot of messaging from those meetings between the U.S. and the Chinese delegations last week, with the Chinese delegation saying that in public, the U.S. Delegates were very hard on China, and in private, they were much more conciliatory. Can you talk a little bit about what that is, how that's being interpreted by people in the United States?
Well, there's definitely a fine line here for the Biden administration to walk on when it comes to China. I mean, on some sense, you did see sort of during the campaign season that, you know, former President Trump was campaigning on the fact that he was tough on China. And then you also saw President Biden come out and say that he was tough on China as well. And so I think there's definitely a sense that there needs to be the perception of being tough on China at this point. You see a lot of bipartisan support from that in Congress, both from Democrats and Republicans, who have supported legislation that includes sanctions, denying visas, and other types of things. But you also do know that obviously China is a huge economic giant, and the U.S. does need to work with China on a number of things, including trade, including things such as climate change and the climate crisis. And so there definitely sort of is this balance between being tough, but also being able to still have that relationship and work with them.
And just quickly, Emily, before we let you go, I do want to harp on this higher taxes issue that we've been hearing more of from President Biden's administration, the idea that they're planning to hike taxes for families earning $400,000 or more. What is the timeline on getting some of those tax hikes put into place?
So I would tie the timeline on the tax hikes very closely to the timeline on that larger infrastructure package that we're beginning to hear about. That's sort of the next big legislative item that the Biden administration has their eye on. It's something that Congress is already beginning to work on, and that whatever they decide with taxes, part of that will be going towards paying that larger infrastructure package. So look for those two things to move in tandem over the next several months.
Emily, I'm still trying to understand the approach from this administration on tax policy. The 110,000 number that was used last week in an interview on this program. Are we trying to help the hardest hit in America, the people in the line for food banks, or are we trying to win back the middle class? What's the emphasis for this party, for this administration?
Well, so far the messaging from the Biden administration has been taxing the rich, taxing the wealthy, taxing the 1%. I mean, as you correctly point out, with the 110,000 number, those are individuals who might be impacted by rising of the corporate tax rate, which is also something that we've heard from the Biden administration. They've proposed raising it to 28% from its current 21%. And so that could definitely have impacts on middle-class families. But the Biden administration is really trying to sell this as something that would mostly impact those in higher tax brackets.
Emily, great to catch up. Thank you. Emily Wilkins of Bloomberg Government. Lisa, I find this conversation at the moment absolutely fascinating. We're throwing out some big numbers, and we're redefining, I think, what middle class is in America and what is sufficient to raise a family on in America. An important conversation taking place in D.C.
And I think that you were right to bring up that $110,000 a year benchmark, this idea that people making that are middle class and possibly even deserve extra aid, while people making above $400,000 need higher taxes. A very interesting bifurcation.
It's a debate, a conversation, certainly not our view, that's for sure. We don't have one. Coming up, Laura Rain, FS Investments Chief U.S. Economist from New York City this morning. Good morning. S&P 500 futures unchanged. Live from New York this Monday morning. Good morning to you all. This is Bloomberg.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm
David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
New York City for our audience worldwide. This is Bloomberg Surveillance this Monday morning. Good morning to you all. This is the price action over the weekend into this morning that got everyone's attention. Sunday evening when the FX market opened up, the dollar lira move was absolutely massive. This morning, dollar lira down around about 8.6%. That is a weaker Turkish lira. The move was bigger than that. How do you win back credibility with this market? Well, the first words that comes out of the new central bank governor's mouth in a statement is that he's committed to price stability. The way of achieving price stability, if you're this particular governor, is a little bit interesting, and we'll touch on that a little bit later. So what's the spillover? The contagion, so to speak. Right now, not much. Switch up the board. Into the bond market we go. Into treasuries, yes, there is a bit. 2s, 10s, and 30s. 167 on a 10-year right now. Yields in about 4 basis points. Similar move on 30-year debt as well at 238.81. We're going to hear from the chairman, Jay Powell, a little bit later this morning at 9 Eastern. We hear from him again tomorrow and again on Wednesday as well. Is he still happy with what he sees? So far, so good. And every time we've heard from him, he said the same thing. A statement of confidence. He seems to be comfortable with this move. We'll touch on this through the week. A huge amount of supply. On Thursday, we get that 7-year note. Remember that auction several weeks back? Ugly. We get a repeat of that auction, that maturity on Thursday. No idea if we get a repeat of that result. So that's the story in the bond market. Let's finish on this in the equity market. The story looks like this. There isn't much of one. On the S&P 500, basically unchanged. Outperformance on the NASDAQ. A bit into the bond market probably helps that move. The NASDAQ 100 futures up now by about 0.8%. Later, a move higher in equity markets for big tech and a move lower in the bond market for bond yields specifically. That story still intact.
Which is interesting because you have to wonder what the fundamental story is for big tech to trade in tandem with treasury yields. Does this indicate, frankly, that if treasury yields rise much more, that even more of the froth in markets, or at least that's what it's perceived as, will be knocked out of the market? And frankly, that's one of the biggest questions for equity investors this year, John.
And I'm no longer in vision, so you're going to have to carry on talking, Lisa, and get us to our next guest if you can.
All right, absolutely. Right now, let's take a look at what's going on in Turkey. I really am wondering what President Erdogan was thinking. I mean, John pretty much nailed it when he said that this is a situation where he didn't like a 200 basis point rate hike because it didn't serve his purposes. Justin Kerrigan has been covering it all for us at Bloomberg News. Justin, can you give us a sense of how much of a surprise this was and how this went down from President Erdogan's perspective?
Well, it was a huge surprise when you consider that back in November, when Erdogan made the previous change at the top of the central bank, we entered a period in which the Turkish authorities had quite clearly sent the message to the markets that we were entering a period of monetary policy orthodoxy. We saw a series of interest rate increases enacted by Naci Ağbal in almost 900 basis points, in fact, since he took over just 4 months ago. And that's brought a period of stability to the lira after a very poor start to 2020. And we saw the lira coming back into favor at the beginning of this year, end of last year. Then, interestingly, as we saw the increase in U.S. Treasury yields, the lira came under a bit of pressure. Maybe there's a kind of a message there for the rest of the EM universe, and Turkey being one of the more vulnerable stories in the EM sector got hit, and the lira sold off. The response from Ağbal was to raise by 200 basis points on Thursday, and Erdogan, who's an advocate of lower rates, believing that high rates actually stoke inflation, he got rid of Ağbal and brought in the new guy, Kavcıoğlu.
Justin, you make a really important point, and I want to broaden out. You said that basically a lot of emerging markets have been hit by the strengthening dollar. This idea that in order to compensate, to continue to lure money into their economies, they have to raise rates. They have to go exactly counter to some of the measures that the big central banks in developed markets are doing. How much do you expect similar moves like that in other developing nations, given the political pushback that we're seeing in an extreme form from President Erdogan?
Yeah, well, we saw maybe a month or two ago the growing signs that this sort of cycle of rate cuts and historically low interest rates across the emerging markets was probably coming to an end and beginning to turn. We saw what happened in Brazil. There was a raise there last week. We also saw in Russia an increase. So clearly that we're through that phase, and we'll see more of it going forward. It's not a uniform move. Some stories are more likely to enact increases faster than others, and Turkey was one of those. Turkey, though, I have to say, is a very kind of specific case. It's a very unusual case. So I wouldn't say that this is necessarily indicative of the way everyone else is going. As I said earlier, it's a very vulnerable story, but there is a lesson there for sure.
Justin, let's just finish on Turkey then and make this more specific to Turkey. What we've seen in the past is the Turkish leader, President Erdogan, say a series of things about what he thinks leads to higher inflation and what he thinks leads to lower inflation. And then he's been overwhelmed by market events, and a central bank governor has done what they need to do. As you see things play out at the moment, Justin, do you see a repeat of that potentially, where the governor has to respond to market conditions and is overwhelmed by events? Or is this really a massive shift in the thinking of the central bank and what they believe leads to higher inflation and they believe leads to lower inflation?
I don't think the thinking has changed at all. I think this is more kind of flip-flop in terms of the approach to controlling the lira and getting a hold on inflation. And Erdogan simply lost his patience with Powell, who quite clearly demonstrated his hawkish credentials over the past 4 months. I think what will likely happen is that Kavcıoğlu will cut rates at some stage in the not too distant future, and we'll see the lira continue to weaken in that environment. As our economist in this region, Ziad Daoud, put it yesterday very succinctly, he said, you either lose your job as a central banker or you lose the lira, and I think that's where we're headed.
Justin, it's great to catch up. A conversation will continue. Justin Carrigan there, senior editor. Lisa, this is such an important moment for Turkey, and for those of you out there not familiar with the thinking of the Turkish leader and the new central bank governor, Kavcıoğlu, the story has been for a while, Lisa, that the Turkish leader, President Erdogan, believes that higher interest rates lead to higher inflation and that lower interest rates lead to lower inflation. And now, seemingly, he might have a central bank governor that believes in the same thing. And what that could mean for this market could be fascinating.
Yeah, it means devaluation of the lira, at least if you take a look at the move today. And frankly, it just underscores that if you will it, doesn't make something actually happen, John.
Dollar lira right now.
It seems politically correct.
7.90, a move at 9.5%, just a monster move. Lara Raim joins us, FS Investments chief U.S. economist. Lara, over the last month, the chairman of the Federal Reserve has sounded like the chairman of the U.S. central bank, not the global central bank. Do you start to see issues emerging on the global stage as a result of that?
Well, I think there is this idea that the dollar is now that interest rates, a lot made me think of the dollar in your prior conversation, is starting to really rise in the U.S. more than it is in the rest of the developed world. And, that's something that I think will continue to get a lot of attention. And to your point, a stronger dollar inherently slows down the U.S. economy. I think the real question is the Fed to be able to have its cake and eat it too. It wants to be positive on the economy. All that's pushing up rates. And then at the same time, when does it start to circle back and actually hinder U.S. economic growth?
Well, right now, no one's talking about slower growth in America, that's for sure. The consensus view in our survey, 5.6%. I think the Federal Reserve's at 6.5% for this year. Lara, let's start there and then we'll get into it. What are your expectations for this year? And then perhaps increasingly of importance over the last couple of weeks, looking out, the deceleration from 21 to 22. Can you put some numbers on that?
Yeah, absolutely. I think we're looking at 6% or more for this year. And then for next year, back down to 2.8%. Because to me, all of these, the bigger bump that we get in services as part of the economy catching up, hopefully getting that labor market back to full employment, all of that's going to cause a really strong growth profile this year. But beyond that, I see a couple of tailwinds building, one of which could be the government needing to put in more austerity, needing to find a way to pay for all of this spending. I think the pendulum could swing the other way, and that's just one thing that could bring growth crashing back to trend. I say crashing not because we would in any way go negative, but growth of 2.8% would still feel very strong for our economy.
This is really important, Laura, and there's a question about those tax hikes that we've heard out of Biden's administration as they talk about an additional round of stimulus, particularly for infrastructure spending. How much are current estimates of economic growth factoring in some of those aspects, those tax hikes, those other sort of measures to curb the deficit going to hamper growth?
I mean, Lisa, I go out with my forecast and people say that I'm pessimistic. I think right now there's so much euphoria, there's so much optimism. The economy has done so well through this, epic downturn that when you sort of talk about structurally low growth or demographics or, any of the boring stuff that we were all talking about before COVID, and then you layer on the fact that, the pendulum could very well swing back from being so fiscally accommodative. Anything like that, I think could, I don't know. I don't hear a lot of other people talking about it, but I think it would be a mistake to assume that the U.S. is now China and can sustain growth at these astronomical levels.
Laura, a really good final point. Thank you. Laura Rain there, FS Investments Chief U.S. Economist on the U.S. and on China. We talked a lot last week about areas for not just a competitive response from either country, but maybe an area of collaboration, climate. The US and China climate envoys to meet, according to Dow Jones. John Kerry to join high-level climate conference on Tuesday, and the delegation from the United States and China, those two envoys are to meet, according to Dow Jones. And Lisa, this was our conversation last week. Is this the area for collaboration? Is this the bridge that both of them can walk over to actually have a conversation in a way that maybe we didn't last week?
I am struggling with messaging. I'm struggling with how things are being cast by either side and trying to parse out the noise from the signal. The idea here of, is China trying to hook onto a key talking point for the Biden administration in order to get political clout with them, or is this something real? And I don't have a good handle on that, John.
Right now, what we have is the headlines coming out of Dow Jones that John Kerry will join a high-level climate conference hosted by China on Tuesday, that Kerry and Chinese envoys have held informal talks on setting a mechanism for engagement. Much more on that through the morning. We'll catch up with Kevin Cirilli, I think, in the next hour. We need to talk about vaccinations in this country. The numbers have been absolutely brilliant. 2.5 million on average every single day over the last 7 days. More still to come on that when we catch up with Dr. Jennifer Nuzzo, Johns Hopkins Center for Health Security Senior Scholar. As we count you down to the open about a couple of hours away, equity futures are stable. The S&P 500 up a couple of points at 39.0150. From New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. The European Union is on the verge of halting coronavirus vaccine exports to the UK. The bloc is risking a sharp downturn in relations with London to try to turn around its lackluster vaccination campaign. The EU will likely reject export authorization of AstraZeneca vaccines to the UK until the drug maker fulfills its obligations to the EU. Miami Beach is extending an emergency curfew for up to 3 weeks. The move came a day after police were just overwhelmed by late-night crowds and made scores of arrests. On Saturday night, people on famous South Beach ignored social distancing and mask guidelines whilst celebrating spring break. Police used pepper balls to try to get the crowd to break up. And Goldman Sachs says that U.S. stocks are taking President Biden's tax plans in stride. In a note, Goldman strategists say that stocks are pricing in the good news around infrastructure and showing little concern about those tax hikes. And President Biden says at some point he'll visit the U.S. border with Mexico, where the number of migrants seeking entry has risen sharply. The influx of border crossings has become a political liability for the Biden administration. The president has reversed many of Donald Trump's hardline immigration policies. Saudi Aramco's $75 billion dividend has managed to survive despite one of the biggest disruptions to the oil market. The state-controlled crude producer will make the largest payout of any listed company. Almost all of that dividend goes to the Saudi government. Aramco's net income fell 44% last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. generation's biggest problem
Climate change is happening.
and the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Balancing the need to let the approval process of the AstraZeneca vaccine take place here in the U.S. with the importance of helping to stop the spread in other countries, we will loan a portion of our releasable AstraZeneca vaccine to Mexico and Canada. This action will allow our neighbors to meet a critical vaccination need in their countries.
That was Jeffrey Zentz there, the White House COVID response coordinator from New York City this morning. Good morning. Alongside Lisa Brabitz, I'm Jonathan Ferro. Tom Keane out of the building. He's taken the rest of the week off. From New York, here's the price action on the S&P 500. Shaping up as follows. Futures up a couple of points, up not even 1/10%. Bit into the bond market, yields in about 3 or 4 basis points to 168 on 10s. That means the Nasdaq's doing nicely. The Nasdaq 100 up by about 0.75%. You're familiar with this theme. In the FX market, euro dollar 119.05 and unchanged on a session. Nothing unchanged about dollar lira. What a move we saw when this FX market opened up. Dollar lira with a move of 10.5% against the Turkish lira in the dollar's favor. Dollar lira now just south of an 8 handle once again at 797.60. We'll talk EM a little bit later this morning. Got to touch on vaccine nationalism as well and the spat over the AstraZeneca vaccine in Europe and supplies between the United Kingdom and the European Union. We did also get AstraZeneca phase 3 trial data here in the United States of the COVID vaccine showing 79% efficacy and, more importantly, on preventing severe cases and hospitalizations. That number is a whole lot higher. Let's have that conversation now with Dr. Jennifer Nuzzo, Johns Hopkins Center for Health Security Senior Scholar. Doctor, let's start there. The phase 3 trials here in the United States for the AstraZeneca vaccine. Your takeaway, please.
It's really great news. I mean, I really appreciate that you pointed out that it's 100% effective against severe disease, because that's really what we care about with respect to this virus. We want to defang it and tame it and make it such that we don't care about it, and preventing severe disease will do exactly that. Now, the 79% overall efficacy against any clinical disease is also great news. People are naturally going to try to compare that to Moderna and Pfizer, which is not really a fair thing to do because it's really apples to oranges, different trials conducted different times. But overall, I think these are good numbers, and it's going to be helpful to have another vaccine available.
And as many people have said on this program, including your colleagues from Johns Hopkins, focus on the deaths, focus on that data more than the cases now, Doctor. Can you walk us through that right now, what those two data sets look like and the trend for both?
Sure. I mean, all of the vaccines that we have available now, and with the potential addition of AstraZeneca, I mean, they are all near perfect, if not completely perfect, depending on the vaccine, at preventing severe disease. I mean, this is really great news. That's really what we care about the most. We wouldn't be talking about this virus if it didn't cause severe disease. So to take that off the table is extraordinary.
Dr. Nuzzo, given the fact that we need a global effort for inoculations in order to recover fully economically on a national basis, what do you make of this move that the European Union does not want to export AstraZeneca vaccines until to the UK until everybody has enough product on the continent? What do you make of that move?
I mean, you know, if you've been studying these issues for 20 years like I have, it's not surprising when you're in a global pandemic, countries resort to nationalism, and that's what it very much feels like is happening here. Countries that don't have for themselves are going to take control of, say, factories within their borders in order to make sure that they have some, and that's what it seems to be about. It's a little bit, I don't know what the right word is. It's not ironic. It's sort of sad, I guess, given that Europe, many countries recently paused AstraZeneca, the use of that vaccine out of safety concerns. Now, pausing is not a bad idea if you are truly concerned, but there's been really debilitating levels of infection in many of these countries. So we are both, stopping and starting the game, unfortunately, when we really need to keep rolling it out. And I think we're going to see more of these sorts of approaches as countries are really struggling with how many doses they have versus how many others have.
And there's a question, as you said, there still is a very high level of infections. And actually, I believe that the global deaths rose for the first time since November in the past week from COVID. And you see what's going on in Miami Beach. And I'm wondering how close we are to the risk of a third wave or a fourth wave, however you categorize it, based on the fact that people feel like we're done with this. We want to get out. We want to be with people. We're not waiting until July 4th. And that's happening around the world, regardless of the vaccinations.
Well, globally, this is still very much an event in progress, and I don't think that we should write the end chapter on any single country in terms of how they fared against COVID. We could very well see, even greater resurgence worldwide. As for the United States, I am hopeful that because we have been so aggressive in our rollout of vaccines, that it's likely that we're going to see a rise in cases, but it may not get to the point that it was. I don't think it will, that we saw over the holidays. So I think the key for all countries is whatever vaccine you have, use it without haste. Vaccine distribution without speed limits is really essential.
Doctor, before we let you go, and I don't expect a definitive answer to this question, just want to try and understand where your thinking is on it at the moment. The risks around opening up international travel, particularly when the UK, the United States and other select countries are doing so well with this vaccine and many others are not. What are those risks as we get deeper into summer?
Yeah, I mean, it is a risky proposition. I know it's been floated the idea of having vaccine passports to allow people who are vaccinated to travel and only allow those people to travel. In my view, that's a really ethically fraught proposal, given how much disparity there is in who has access to vaccines versus not. It really penalizes the poor countries that have not had as much access. So, it's really something that I hope the global community can negotiate some agreement on rather than continue to pursue this every country for itself approach.
Do you think it's more of an ethical question than a scientific one at this point?
Yeah, I mean, I do. I mean, vaccines are really the path back to normalcy. That said, normalcy will not be completely normal until all countries are protected. So sharing vaccines, making sure all countries have access to vaccines is utterly essential for us to restore not only our lack of concern about this virus, but also our economy.
Doctor, we enjoy your ongoing contribution to this program. Thank you. Dr. Jennifer Nuzzo there, Johns Hopkins Center for Health Security Senior Scholar. And Lisa, these are the conversations we've been having domestically as well. The risk of creating a two-tier society, and on the international stage, there is a similar ethical concern as well for the medical community too.
Well, two-tier society, but at the same time, you can err too much on the side of trying to distribute it fairly, and then enough people can't really get in line to do that. I mean, this is the question we talk about every day, John. When do you open up the vaccinations to everybody so they can get in line? And when do you wait to make sure that everybody on the front lines or who should be getting it, get it? A very tricky question, and one that I'm expecting to hear a lot more about.
Here are the numbers right now. 2.49 million doses per day on average over the last 7 days. That's the latest data for America. 124 million doses given, enough for 19.1% of the population. Really fantastic numbers in America, and we hope those numbers stay as elevated as they are right now and maybe even clip higher too. From New York City this morning, good morning to you all. Alongside Lisa Abravitz, I'm Jonathan Ferro. Tom Keane out of the building. He's taken a long break on a beach somewhere. I'd love to tell you where he is. I can tell you where he is. I know where he is. I'm not going to do that, though, Lisa, because I respect his privacy, unlike his disrespect or lack of respect for my own.
You mean in terms of Capri and constant references to that? Can I just say, Tom Keane leaves and the Lira is the first and top story. I mean, he talks about the Lira when it's not even moving. And here we have the Lira in front and center. It must be killing him.
I can tell you that he's tuned in right now because I have received the messages from him already. From New York City this morning, good morning. Coming up, Michael Schowell of Market Field Asset Management, CEO on this market and the turmoil in EM over the last couple of weeks. This is Bloomberg.
We will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Concern that this is 2013 all over again and we have the tantrum. I think those concerns are overstated.
While traffic may continue to be weak, sales are improving.
The savings rate's likely to come down. I'm not sure that it goes all the way back to pre-pandemic levels.
The bearish argument around runaway inflation is not going to come to fruition, and they're kind of fattening themselves up for the slaughter.
If inflation ticks up above 2%, then the chairman's going to get a little uncomfortable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Brace yourself for a ton of Fed speak from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene back with us next week. In the equity market right now, S&P 500 futures up 2 points. Lisa, the Fed speak this week is overwhelming. Chairman Powell today, tomorrow, Wednesday, a lot more still to come.
Yeah, and what are they going to communicate? I mean, they kind of had a home run last week. Yes, there was that little bit of a flare-up in the bond markets on Thursday, but otherwise, I mean, if you take a look today, all is calm on the bond front despite the surprise in the regulatory standpoint, and despite the fact the Fed is taking a new stance on inflation. They're letting it run hot no matter what, period, full stop, John.
We know what emerging markets would like to hear. They're probably not going to hear it. Dollar lira with a move of about 10 percentage points now, just south of an 8 handle. A new central bank governor once again. How many times have we seen this movie, this car crash in Turkey, and then people buy back in, this car crash in Argentina, then people buy back in, seemingly just on repeat, Lisa, every single time?
It's a casino. I mean, Steve Auth from Federated Hermes was saying this is basically perhaps almost so bad it's good. And given the fact that there is so much money lying around, sloshing around in deposit accounts, a lot of people are saying, why not gamble on that? I mean, if you're going to gamble on GameStop, why not Turkey?
There's a point. So here's the setup of this Monday morning. Good morning to you all. We look like this in the equity market. The S&P 500 totally unchanged, but there is a defensive tone to this market. You see it in the NASDAQ 100 futures up 0.7%. You see it in the bond market, yields lower by 4 basis points. And you also see it in foreign exchange. In G10, the outperformance through much of this morning has come from the Swissy and a Japanese yen as well. Right now, euro dollar 119.12. Lisa, something we'll return to again and again and again through the week is this ongoing spat between the EU, the UK, with AstraZeneca very much in the middle of it all.
Yeah, the UK definitely coming out looking much better than the EU when it comes to the vaccination distribution. You talk about the Fed speak. It kicks off today at 9 a.m. We've got the Fed Chair Jay Powell speaking at the Bank of International Settlements Innovation Summit, which also has a lot of other headliners in it. I really want to hear what he has to say about bank capital relief. This came as a surprise to some people. Why were they suddenly rolling back their exemption that allowed banks to hold more treasuries, not without any additional capital on their balance sheets? It seems to go counter counter to their desire to keep really easy monetary conditions at the same time as allowing inflation to run hot. Today, also, Tony Blinken continues his world tour. The Secretary of State is meeting with NATO allies as well as European Union leaders. Expect them to talk about the vaccination rollout. Also expect them to talk about their collaboration in countering the China summation of all of their economic prowess and their recovery there. How are they going to counter that, particularly on the technological side of things? And then at 10 a.m. today, the U.S. February U.S. existing home sales coming out. I'm very curious to see how much strength there is here, given the fact that mortgage rates have been increasing at the same time that we had a pause in both the checks coming from the government as well as an easing up in some of the restrictions due to COVID, John.
That's the economic data. Lisa, looking out for that also. I know Lisa will be focused on the supply story coming out of the Treasury this week. $62 billion of 7-year notes coming to market this Thursday. No doubt we'll have full coverage right here on Bloomberg on that particular supply, given what happened last time around. Joining us now, I'm pleased to say, is Michael Schell, Market Field Asset Management CEO. Michael, we've got to start with the story over the weekend into Monday. We should have learned the lesson, should have understood that as soon as this central bank governor hiked 200 basis points, his time was gone. It was over, Michael, and it was over the weekend. As you approach emerging markets right now, Michael, what are the dominant concerns outside of the idiosyncrasies of, say, Turkey at the moment?
Well, I think the big question in emerging markets is, are the commodity producers actually benefiting from the commodity cycle? I mean, we know that there's been an upsurge in commodity pricing. We know that volumes have been, very strong, not just in China, but elsewhere. And yet, you still look at, I think the two currencies, we would look at would be the Russian ruble and the Brazilian real. They're still much, much closer to their pandemic lows than their pre-pandemic levels. And, in both cases, you can see reasons for it. I mean, Brazil has really had a horrific COVID experience, much worse than the average country, and the sort of competence of the Bolsonaro regime is clearly been open to question, over that period. And yet, you've never seen iron ore prices where they are, and even crude oil where it is, and the real in the high fives before. And there you have a central bank which, looks like Turkey did last week. The Bank of Brazil did hike by 75 basis points, did indicate the willingness to hike by another 75 basis points. And unlike Turkey, it's still a sort of genuine democracy with respect for the independence of the central bank from the government. So, as I say, I sort of see the turmoil in Turkey, and it's really the same story again and again. You have a president who has no concept of independence of a central bank or even sort of the general democratic process. But a country like Brazil and the real where it is, if it can sort of weather the sort of spillover effect in Turkey, that looks like a country that, that's a currency that looks cheap. If the commodity cycle continues down its path.
Well, Michael, you raise a couple of good points. So let's start with this one. We've got the political issues in Russia right now, and the relations between the United States that have hit the ruble. That central bank's got a hike again in the minds of many people. In Brazil, as you point out, really struggling with the pandemic. In Turkey, we have central bank independence issues. Is there a common thread between all the stories right now, Michael? And if so, what is it?
No, I mean, those are three sort of different stories. I mean, I think, EM has political hair attached to it. That would be the common story. There's no easy way to make money in emerging markets in the way that there was 15 years ago, when all of these countries seemed to be moving towards better governance. I mean, even Putin was considered to be competent and not a problem outside of his borders 15 years ago. So, as I say, the sort of clean, easy way to make money in emerging markets isn't there. On the other hand, as I say, some of it really looks quite cheap, given that I think we are in the early to mid stages of a significant commodity cycle. The other side of emerging market, on the other hand, is starting to look quite expensive. The technology portion of EM looks as expensive, and it looks as expensive as the U.S. portion is. So ironically, the overall emerging market index continues to look okay because it's dominated by technology. But perhaps, the kind of rotation that we've really seen, certainly in the developed world, if that starts to take hold in EM, it isn't necessarily good for the overall emerging market index. But some of the real laggards in EM do, I think, have the potential to catch up.
When you talk about reducing tech, I want to just home in on that, this idea that you're doing that across the board in your portfolios in the U.S. and beyond. Are you expecting actual declines in big tech stocks, or do you think that this just is that we've seen the run-up and the gains have already been got?
You know, I think during periods of weakness, I think overall it's a fairly benign investment environment because of liquidity conditions. But I do think in periods of weakness, particularly weakness led by higher yields, we've seen that it's high multiple technology that really, that really suffers. On the other hand, the advances that we've seen, particularly since December, we've seen it's the cyclical stuff that really does fine. So for us, it's more a matter of being, not being long than actively betting against technology overall. And as I said, I think at the index level, it's now the indexes that just don't have a lot of technology in them, which are starting to meaningfully outperform yesterday.
Michael, does it make sense to you that big tech is so closely tied to interest rates right now?
I don't think it's necessarily big tech. I mean, it's not really a sort of Facebook, Apple story. What it really is that the size of, if I said the speculative portion of technology grew tremendously in market cap between the beginning of COVID and the end of last year. And so, as I say, it's not really a big tech story. It's a speculative tech story. It's the super high multiples that you see in a sector like software or anything to do with electric vehicles. It's the promise of the future that seems to be suffering from higher interest rates. As I say, it's not necessarily the FANGs which are a problem. It's certainly not old legacy tech. It's not a Intel Cisco type story. It's it's the stuff that came from nowhere and, in aggregate ended up with hundreds of billions of dollars of market cap.
Michael, I want to pick up on the words you used there, just the language, that they seem to be suffering from higher interest rates. Do you believe there is some causation there, or just correlation, that we're reopening, the outlook for growth looks better, and there's no need to be in these names anymore, and in correlation, in coordination with that, yields are higher too?
Yes, I think it's a little bit of both. And once a macro trend takes place, in other words, once we associate higher interest rates with lower multiples, it becomes a self-reinforcing process. And then you start to see active betting of yields being attached to high multiple baskets. And let's say once one of his macro ideas takes place, it's hard to shake that out of a market until you create extreme value again.
It's got a strong hold on this market right now. Michael Schell, Market Field Asset Management CEO. Michael, always great to catch up with you, sir. And Lisa, you touched on the issue to start the conversation. I think that's what you're getting at. Is this correlation or causation? Is it high yields in line with lower NASDAQ prices because of what we're seeing just on the outlook? It gets better, it gets brighter. Growth is less scarce. Why pay up for growth?
I mean, that's the key question here. Or is this an idea of perhaps stocks generally being overvalued because of how low benchmark interest rates are? I want to just say, though, one thing that I've been struck by is the Dow. And I know that you love the Dow, so I really wanted to bring it up because Tom and I have been messaging back and forth about how I can weave the Dow into the conversation. But industrials have done so well. I mean, you can hear an industrial situation outside of my window if you hear that extra noise. But I am curious about how far that has to go. At what point the sort of brick and mortar aspects of life regain some prominence after people basically left it for dead during the working from home era.
To be clear here, I have no